No.
Because I need to go over there. Had a posting on my fucking dude, my stomach is up there. You know, what is this for? Picked it up, and it's the people that took over my house. They bought it from the people I buy my house from. So I called that one, I sat down, and said, I called the guy, and he goes, hey, Stan, how you doing, blah, 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 he's all nice, and everything, and I'm like, you know, yeah, I said, I found a post note on the front door, and he goes, oh yeah, he goes, I just stopped by just to let you know I found a dude that can cut that tree down. I said, oh yeah, really? And I said, well, how much is it, you know? So I've been working with people trying to get them over and do this, you know, blah, 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 blah. I said, I can't afford $1,600, you know, and all this kind of stuff. And he goes, no, 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 he goes, it's okay. He goes, I found a guy who'll do it for $350. I said, you better make it happen.
Right.
Did you ever come up on another idea? Well, this is from the guy that's doing the house for $350. And so, no, I hadn't had a chance to even do that. And so I said, well, okay, well, you know, let's get on that, you know,
Right.
make it happen. He goes, because one, he goes, well, he goes, well,
Yeah.
he goes, what the deal is, he goes, I have one guy who's going to cut it down for the 350. You know, I have another guy that wants to do it.
Brenda's one complaint. Well, she has two complaints, but I think the one that's
bring
kind
it on,
of
I got the money in my wallet.
will kind of save me
Right.
because we know that corporate
Carrying it
will
in my
not
wallet.
want
I
this
left it at home.
Right.
Exactly.
You know, I said,
because
oh.
they consider their taxable proprietary. So
Oh.
if I didn't have it behind some sort of security wall, my saving grace is I'm not really putting it out there. It's there, but so far only the boss knows and people in this room. And whoever the boss tells it to.
Oh, thank you.
It's not like I'm trying to get views. No, I don't want to be there. Her complaint is they can't really see the screen.
That is true.
I know, but you can't see the screen, and I get that, and there's no help for it. I remember before when I was projecting it on the wall, you could see it, but then you saw what the problems with projecting on the wall was. You know, it's hard to read on the smaller text.
Have you tried to put it in a different angle, or is it because the
It's just because the only way I'd have to be closer,
Here.
which means running an Ethernet cable across the walkway, and I don't want to do that.
whatever what they do, you know, I see on YouTube when sometimes they are talking and they split the screen and then they show whatever they want to show, like something like this.
I need better software
Yeah.
for that, not free software.
So that's what it does.
Yeah,
Software.
I've seen that before. Yeah, I need better streaming software.
What kind of software do you use?
A lot of people.
Two, I know that's one of them.
Not for this. Zoom is
I know
on
the
this.
steel of it all over the.
You'd have to like something like Final Cut Pro, or I'm using
It's
OBS.
just, when I'm sitting there and trying to scroll down pages, I'm like,
So-
and just start doing this.
Right.
Is it something like equivalent to
Yeah.
Linux, you know? So that's
I
pretty,
know.
OBS
that's it, that's
that I know of. Like I said, I could spend money and get better software, but
no.
well, the other thing is I think that even if corporate find out about it, they might not
I have 2 tablets.
bite me so bad on it because you can't see the slides,
Yeah, which is their thing.
which is the proprietary part about the whole thing. If I was given a lecture, that might get me a loophole in case they ever got wind of it.
I got it on the screen.
Yeah, because the only other way would be if you
No,
had
I just saved it to
like
the
a
next one.
printed, instead of slides, you know, maybe like a printed stuff, and you would have it here. board and then you can see it, but
Well, I think there might be a way that I can go in after the fact. Again, though, I mean, this would be kind of flying in the face of corporate, but I think there is a way I can go in after the fact and upload at least a link. And so I would save it on like a Google Drive someplace with public access and upload a link where you can download. But again, I don't think that
yeah.
that would cause, that'd be a big red flag, I'm sure. And the other thing that Brenda has made comment about was the audio, but I've listened as much as I can stand to listen to my own voice. And it's not terrible. I don't know about driving down the road with road noise.
Just crank up the volume, that's all we can do.
It's at that point where next year I'll look into having a microphone, but I don't want to switch in the middle because it just never. You know, what problem am I unlocking that?
Yeah, because it's always something. It never comes out the first try.
Yeah. There's always going to be, okay, well, now I got this nice microphone. You know, well, I'm using a Mac. If I brought my AirPods in, it'd probably work.
See, I always got it on my phone.
That's what they do. So,
But what would I have to do with the software to make it, you know, I got to change its audio source. And then AirPods are kind of freaky when they last the 3-hour lecture.
See, I can't get away because it scares me because when they start, when the very
Yeah.
first time you hear anybody say
can you
out,
use a different kind of?
Well, maybe
blue out,
what you could
red
do
out,
is you could
green
do
out,
the left
okay, I
and
don't
then
need it anyway.
so the right's always in the case. And then when you get down to it, you can switch.
But what if you use a different kind of
Yeah.
gears?
Oh,
You know, like,
What you doing?
they work with gears or something.
Well, I don't need ears. I can get just a regular microphone.
No, but I mean, with this, I can talk to people, you know, calls and everything and stuff.
Yeah.
Wouldn't that be the same thing?
It'd be the same thing. It's just the question is like how much efficiency am I losing? You know, when you're on the phone, it can be low power because your phone is not usually 5 feet away.
Yes, sometimes.
All the time?
Not all the time.
See,
but,
it's all the time 5 feet away.
Because there's sometimes my family calls me and I just leave the phone somewhere and I'm doing things around the house.
Yeah, I get that.
And I walk away.
I'm not worried about that. It's just that from being, you know, low power to having to boost the power to keep the signal. You know, how far? Before it's going to go from low power to higher power and use up more battery faster. See? All those little wild cards.
Yeah, because I don't think I
Even
ever
over
talk
at
to
the golfer.
3 hours non-stop.
Yeah.
I get as far as 1 hour. And
Well, and I've listened to 3 hours worth of music, but that's just in a passive state. That's not in an active one.
no, but I mean, you know, talking.
Yeah.
That's
Yes, because you're talking, it's transmitting in a long width.
yeah.
Did Mac fall in back there?
Apparently, so. Bad timing on his part.
So my neighbor across the street.
All right, I'll just kind of rearrange what I was going to talk about. So let's talk about Chapter 9. We're going to talk about the child tax credit, the additional child tax credit, and the other dependents credit, and a few other things.
Oh, the.
Like I said, the child tax credit, the additional child tax credit, the credit for other dependents, the credit for child and dependent care expenses, the adoption credit, which I'm not going to go into a huge amount of detail on just because it's not very popular. And there's one other thing that I'm going to talk about in this section that we don't have any slides over, and I don't have perfect information because it doesn't exist yet. Again, we're going to distinguish between non-refundable and refundable credits because we have both today. Identify the credits that are based on dependents and what type of dependent they are. Know how to figure and report credits based on dependents, and ignore the part of due diligence. There is a little bit again about due diligence. All right, so child tax credits, what we're going to start off with. And grab your pencil because I have some updated information. So
I'm not doing it on Kelly's.
then Kelly get mad now.
Kelly, did you put the wrong information on that big
To be eligible for child tax credit, the additional child tax credit, the child must have a social security number by the due date of the return, including extensions. And modify that now to that everybody has to have a social security number, no ITINs, which is basically what that next bullet says anyway. Child tax credit in and of itself is non-refundable. The credit now is $2,200 per child, expiring in 2028.
Nope.
So if Trump leaves office in 2028, then it reverts back to the 2000.
Well, yeah. Well, period. If Trump, I mean,
Even if he stays,
Yeah.
of course, he just write
He-
another executive order because why go?
well, he won't be able to stay a third term, but
Not according to him.
even if Republicans maintain the presidency in the 2028 election, they're still going to have to pass a bill in 2028 to extend anything from UBA or
Yeah.
OBA. Anyway,
Oh, it was staying.
one big beautiful bill act.
How
That
much is
sucks.
it now? That
2,200 is the credit all 2,200 per child
I mean, I can see,
for the
I can
next
see
4
the
tax years at least.
upside to some of the credits and whatnot, but
It went up $200.
and the refundable
Now-
amount didn't change.
So what notation are we changing?
It's not 2,000, it's 2,200.
Child tax credit went up to 2,200.
Non-refundable, of course.
Yep.
What you don't use here, though, can potentially be used in the additional child tax credit. This is why I hate this credit. Why not just make it one credit and combine the damn things and get it over with?
I would agree. Just make the child tax credit refundable because you're doing the same thing.
Yeah, I'm doing the same thing.
You're doing the same thing. The only thing you're saying is that if you don't need to use any of the child tax credit, we're only going to let you have this much.
Ed and Marcy, 2 qualifying children and are eligible to take the child tax credit for $2,000 for each child, $4,000 total. Line 16 under 1040 is $2,670, so they can only claim $2,670 of child tax credit. With the rest of it available for the additional child tax credit. Which I haven't got to yet. Just looking at the non-refundable part of this tax credit is that they paid off their tax, the rest of it's kind of gone poof. But then they went in and put in the additional child tax credit.
It's gonna be carried on to the next
It
year.
can. No, not to the next year. It can be carried on to a different credit, which we'll get to in a second. To be eligible to claim the child tax credit, you must have at least one qualifying child. And I'll revert you back to the qualifying child requirements. And what the biggest one is, you're related to them by birth or by marriage.
And disability does not affect this.
No.
If they are not under 17, they do not qualify. Doesn't matter if they're 35 with the mental capacity of a 6-year-old.
Yeah.
They're 35 for this credit. I've had people try to tell me that too.
Yeah.
Well, the
That's-
doctor says he's only got a mental capacity of 12. I understand that, but he's 38 years old.
Yeah.
You don't qualify for the child tax credit. He's not a child, but he only has the mental capacity. I understand. But chronologically, he is no longer a child. He is over the age of 17.
Well, and the other argument is that there's a lot of other tax credits in this vein that disability is a qualifier. Not this one.
No, but the earned income credit.
But one thing about the child tax credit that is in its favor is that you can be married filing separately and claiming.
The only one.
Yeah. Of course, if you incorrectly claim the credit, you will be banned from claiming the credit for 2 years if it's just kind of, well, you...
Have you guys ever met anyone that's
Yes.
been banned?
Yes.
You have to submit letters when you send it in, or does the IRS just actually know?
you can
They
figure-
know.
8662.
Yeah, and if it's not attached,
It'll
it
reject.
rejects.
Yeah, it'll reject that. You've got to do an 8662.
Yeah, you ask that question, they're like, no. And then it rejects for that reason.
Child tax credit currently is at line 19 of your 1040. The additional child tax credit is determined on Schedule 8812. It's on line 28. Well, why is the difference? Well, obviously, 19 is in the tax and credits section, the non-refundable credits. Where line 28 is down in the refundable credits section of your 1040. So let's review what a qualifying child is. Like I said on day one, some of these things I'm going to cover these first 2 days. I'm going to hit a lot. And here we are again. For the qualifying child, for the purpose of the child tax credit, is a child who meets the following criteria, all of them. The child is your son, daughter, stepchild, foster child, brother, sister, stepbrother, stepsister, or a descendant of any of those. This includes great-grandchildren, your great-great-grandchildren, and I hope that you're not doing that. I feel sorry for great-great-grandpa at that point.
Yeah, great.
Chapman, though.
Well, I've been to great. I haven't got to great-great yet.
Say, I've got a great grandchild, but I'm not raising her kids. I'll tell you that much.
Oh, you just wait.
An adopted child is always treated as your child. Again, we've seen these rules before. They're the same rules as a qualifying child. Child must be under 17 at the end of the year. We've seen that rule before. Child did not provide over half of his or her own support during the year. We've seen that before. And remember, we're talking about support. What was actually spent? I don't care if Junior makes $1 million. That's not relevant. Who bought the Cocoa Puffs? That's what's relevant. Child must have lived with you for more than half a year. Of course, temporary absences for special circumstances count. This is the one where there's an exception for child divorced or separated parents if they sign the 8332 saying that I'm not claiming this person this year. This other person can claim that this is the credit that gets transferred. Not the head of household, not the earned income credit, not the child independent care credit, which we're talking about a little bit later. Just this one. And of course, a qualified child who was born or passed away during the tax year, or both, is considered to live with you for more than half the year, regardless how long they were actually alive, if your house would have been their house.
This is where we come back and say if a child was born at 11:59 on December 31st and passed away at 12:01 January 1st, you can claim that child for 2 years.
That's a true statement. That's a sucky situation.
It's a
but
sucky
true statement.
situation, but in that event, you would receive a certificate of live birth for 1 year and a certificate of death for the other year. And you would be eligible to claim that child as a dependent on both of those tax returns.
And that's all true.
And at that first meeting, I would get the birth certificate and the death certificate at the same time. So the following year, we wouldn't have to do this again.
That's true.
The trick is finding out about that.
Yeah.
Because at that point, they're the ones that are going to have to basically tell you what happened.
Yeah.
Because they weren't pregnant when I saw them last year
Right.
in the office, so I have no way of knowing that this is what happened. Under Matt's scenario, now if I extend it out a little bit,
Yeah.
but Matt has a valid scenario. I mean, we stick with it for a second. They
Born-
would have to bring it up.
Born September of 1 year and passed away February of the next. So you know your client's pregnant when they come in that year to do their return, but the child passes away in September. They still get that child for that year. And then, because you already know the child, you knew she was pregnant. So when she comes in and sees you in March, a month after the child has passed, if they're not putting a second child or a child on there and you knew they were pregnant, it gives you kind of an opening to inquire.
Yeah. Well, just because there's a child missing, that should have been, three, 4
Something
months
not
old.
added, yeah.
Yeah. Because you want to add that child because there's child tax credit at play. There's additional child tax credit at play. And they don't know that. They might not be thinking about that. Unless they already have a kid. If they already had one, then they know about these credits. They might ask.
Yeah.
So at which point do you report to the IRS? Well, is there a form saying, well, this child is no longer a dependent?
There's
Social Security Administration already knows.
And there's a box we mark.
Yeah.
Child is deceased.
Child is deceased, and we usually keep a copy of the death certificate.
The hospital or the mortuary will send it straight out,
Yeah.
actually before you do.
And when
Yeah.
you do these forms, it'll say you have to put notes down, so you just jot it down, in your little notes. You got like 3 boxes on it,
Mm-hmm.
You must claim the child as your dependent. Again, this goes back to the transferable dependency. The other person, the custodial parent, says that I'm not claiming this child as a dependent. Therefore, the non-custodial person is listing that child in their dependent section on their 1040. The child did not file a joint return for the year. Well, we know what that entails now. The child must be a citizen or a resident of the United States or U.S. national. So our Puerto Ricans count.
Yes.
The child must have a valid Social Security number at the time of you filing the tax return, but no later than the extension. So it's coming up
They
what,
have,
day after tomorrow.
Yeah.
If you didn't have it by the day after tomorrow, there's no point in waiting. And that's assuming you actually filed an extension. Special rules for children of divorced and separated parents. The custodial parent is with whom the child lived with the greatest number of nights during the year. The other parent's not custodial, but in this case is the one that's actually getting the credit, potentially, if the forms are signed. Custodial parent is not established by court document. I've heard all this before. Just because the state law or state judge in the divorce said this is who claims the kid, no, the IRS does not honor that. That's state law. You do that at the state level. Can't do it at the federal level. Most cases, the qualifying child is considered the dependent of the custodial parent. In most cases, that's the one that's doing it. We know the 8332 route exists. Other people know it exists, but you might see 2 in a tax year. It's just not something that's used very much because they don't. This would imply that the ex-parents are getting along somewhat.
Well, that you can't convince your clients that what the divorce judge here in Wichita, Kansas said isn't valid at the federal level. The judge said I get to claim my child on my tax return as a dependent every other year. And I want all of my credits. That's where we get the biggest argument with this.
Or they forget whose year's what.
Yeah.
Well, but you're keeping in mind that even if I sign 8332, which I could set up, you can do that. Although the IRS would prefer a fresh one every year that the child is not with the custodial parent being claimed by the other one. On the first one, you can actually set up the rules and cover your saying, okay, every other year, so in the even ending years or the odd ending years, whatever the case may be, this child is going to be claimed by that person. And you can set that form up that way.
Well,
Does our program carry that over?
No, you'd have to know. And you can put notes in the client file, of course. And then, because we're trying to work on that. Fusion has that nice section with client notes that, I can make notes, and then if the next time that client comes back, it's with Shannon, or they go to Matt, Matt can look and say, well, hey, this client has this, and also is a little flaky, or whatever note I put in there. Keep in mind that, keep the notes professional. Keep it on a professional level.
this client is a raving lunatic.
Yeah.
Because they can see your screen and they will sit there and read it.
Yeah. So this client is a raving lunatic is not something we want on the screen.
Yeah, we don't want that there, but the client is difficult. That's ambiguous. Difficult as a person, difficult as a return. It's ambiguous. I don't know. But already Matt's kind of on the alert. It's like, okay, well, this one's not going to be easy. I might need more than 20 minutes.
Yeah, we only have one that's like
Well, we all have some that are like that. But,
Yeah.
take advantage of the notes. I'm making a plug for it now. Make notes when you can. I mean, we used to do it on the back of the envelopes all the time
that. Yeah.
because that was your only option. Now you can make those notes in Fusion, and I prefer it because, like I said, this year they come see us, next year they go see you guys. You have access to the notes.
What kind of supporting documentation will be looking for, just
In the
back up?
case that if they're signing it over, so all I need is the 8332 at that point. I really don't need anything more.
So it's just whatever they claim, pretty much verbally. They don't have to show you.
If they're the non-custodial parent, but they have the signed 8332, I'm fine with that because that's basically my documentation. I don't have to prove anything else. I just need that.
If you have if the client comes in with the 8332, automatically you know the dependent he's claiming, A, did not live with him for over half the year.
So I'm not trying to prove that.
So you're not trying to prove that. If he isn't married, he can only claim single.
Because head of household is not transferable, so I'm not trying to prove that.
So you don't have to prove that. There's a spot in the dependents. So when the client comes in and says, hey, I'm claiming my son this year or my daughter this year, I have an 8332 from my ex. When you put the dependent information in there, you're going to scroll down and there's going to be a tab that you can click that'll say dependent being claimed by non-custodial parent, basically. Yep. And you'll click that radio button, and then the program itself will know, okay, I don't have to have him prove residency. I don't have to have him prove support. I don't have to have him prove anything else because he has the 8332. And when we're going through our due diligence, we will put down on there, client is claiming his child this year, client has provided 8332. We will scan the 8332 in with all of the rest of our stuff.
It gets attached to
Give,
it.
give him the original back. Yeah, we can actually attach it as a PDF to the return.
That goes to the IRS.
Yeah, and so when the return is e-filed, the IRS knows that he's got an 8332. And if they have any questions, if they send him a letter saying, "Hey, we want to see the actual copy of the 8332," they can come down. We can pull it up on his supporting documents, print it off, and fax it right to the IRS right then and there.
Yeah, like I said, I'm not. The only thing that I might want to try and prove, but I'm not really going to be a stickler on it, is that obviously they have to be related. But to have the 8332, you basically already kind of saying that you are.
Yeah. And if we've done our due diligence, and mom is a client of ours, then we should have the birth certificate on file and the social security card on file already with the mom's return.
Uh-huh.
So we should be able to go back, look, pull up the birth certificate, and there's dad on there as the father. Perfect. So we print that off, print off the social security card, and scan it into dad's. That way we've got a copy of all that on dad's.
All non-custodial parents must claim or must attach 8332 to their return. It says each year, and like I said, the IRS prefers it that way, but their form itself actually sets up rules where I can alternate or whatever rules are set up they want to go by.
Yeah, there's a box on there that they can check that states this parent is allowed to claim the child every other year for 8332.
Yeah.
That way they don't have to. That way the custodial parent doesn't have to issue an 8332 every other year.
Because they might not like each other that much.
Yeah.
When a custodial parent releases the claim to the dependent child, they also relinquish the rights to the child tax credit and the additional child tax credit, and that's it.
Mm-hmm.
Like Matt said, they might try and argue with you about the other things. But
Well, we had a client at Broadway that came in and said, "I'm not claiming my child. This is my husband's year to claim the child." Okay. So we left that child off of her return. Well, about 4 days later, the husband came in to file a return. Super. Where's your 80? We knew who he was. So, we asked where his 8332 was to claim the child. And he says, "Well, I don't need one. I get it every other year." We explained, no, according to federal law, the custodial parent is the only one who can claim the child as a dependent unless she relinquishes that, and then you get she gives you an 8332. So he left, went, got the 8332, and came back. We turned around, filed his return. He was pissed because he didn't get the head of household status, and he only got the child tax credit and the additional child tax credit. About a month later, both parents came in, wanted copies of everything else for their divorce attorney, who was going to amend the returns so it was proper. Have fun.
go to IRS court with that.
Because
Find out what happens.
what the divorce attorney was doing was giving all of the credits to the non-custodial parent for the non-custodial parent's year to claim the child on their tax return, which in the state of Kansas might be perfectly legal. But at the federal level, which is where everything gets put in on a return that we create, it's not. And we have to follow not only state law, but federal law. And federal law trumps state law every time.
You would think a lawyer would know that.
They don't.
Well, here's
The
They
lawyer
don't
knows
understand
state law.
the lawyer knows state law. But here's the thing. If you think about it, if you go through your progression, when you're sitting there with your client and you ask your client, and you're going through the due diligence questions on the dependent form, did the child live with you for more than half the year? If you're the non-custodial parent, can you truthfully answer yes to that question? Probably not. Did you provide more than half of the support for the child? Didn't live with you? Probably not. The fact that you're paying child support is probably not going to equal 51% of the total support for that child. So there's 2 questions on the due diligence form for a dependent that you as a non-custodial parent can't truthfully answer. And if you can't truthfully answer them, then you're not entitled to any of the credits for a dependent without the 8332. Thankfully, we don't have to worry about them anymore. Yeah. They basically came in and said, we need copies of all of our stuff. You screwed up our tax return. Okay.
No, we didn't.
And that's when she flat out told me, we're taking this to our divorce attorney and he's going to fix your mistakes. Okay. Have fun. Because we didn't make a mistake. And if you think a non-custodial parent can claim all of that, just because the state judge said in your divorce he can claim his child every other year, you better go talk with a tax attorney before you start amending stuff. Because if you amend it, and he gets all of those credits, and he gets all of that refund, and 5 years later, the IRS comes back, audits that return, and finds out that he wasn't supposed to get that because he's not the custodial parent, whatever refund was attributed to him at that time, he owes back, plus penalties, plus interest, and may even end up with at least a 2-year ban, since the amendment might have been done by an actual attorney who should have known better.
Who doesn't? And that's it. Sometimes we have to struggle with other professionals. I've struggled with a lawyer before, and it actually, at least made him question what he was doing enough to go consult with one of his friends that did tax. That's all I ask.
Mm-hmm.
I've also struggled with financial planners, especially on disbursements, about the taxability of them. So, we know our little thing, they know their little thing. We need to get the lawyer, the divorce attorneys in here for this class.
Yes. That would be wonderful. That would be wonderful.
Just post that one online someplace. Courtney, 13, lives with her father, Calvin. Calvin is resigned in 8332, saying they do not claim Courtney as a dependent. So Courtney is not the qualifying child for the child tax credit for Calvin. She is a qualifying child for his former wife. Calvin's former wife can claim the child tax credit and the additional child tax credit. When I say child tax credit, automatically assume additional child tax credit because the two go hand in hand. It's peanut butter and jelly.
Yep.
On disgusting white bread. Oh.
Toasted.
Okay, that would improve it some.
Only if I can have it on toasted rye with cheese.
Peanut
Cheese?
butter with cheese?
And
Peanut
Miracle
butter
Whip.
and
Okay, all right.
Peanut butter cheese? No.
Peanut
God.
butter, cheese, and
I
Miracle
mean, I
Whip.
like all those things, but I'm not sure I want all those things
Are you
together.
pregnant, Matt?
No, but when I was younger, that I tried it that way once, and it kind of stuck. And every once in a while, toasted rye bread with peanut butter, Miracle Whip, and cheese.
How far back?
Huh?
All right.
I don't know.
Uh-huh.
If the child is a qualifying child of more than one
45,
person, only one
50
person
years
can
ago.
claim the qualifying child for all the purposes, unless rules for divorced, separated, or never married parents apply. Remember, you can't transfer the head of household, the child tax credit, the additional child tax, or you can transfer the additional child tax credit, the child tax credit. You can't transfer the credit for child dependent care expenses or the earned income credit. We keep saying this over and over
Yeah.
again. Figured it out yet?
Feed it into them.
Oh,
No other person can take these benefits based on the same qualifying child. There's no halvesies. Well, if there was, it might solve some problems, but just cause different ones. If more than one person files a return using the same child, the IRS will disallow all but one. Usually it's going to be the second one because that's going to come back as a rejection on electronic filing. Dependent Social Security number used on a previously filed tax return for the tax period.
Yes. And at that point, they have two options. Take the child off, file the return, and then once the return is accepted and processed, file an amendment
Paper.
Paper.
by paper with all of your documents proving that you have a right to claim the child. Or
Give up.
turn around and file the whole return as is by paper, including all of your documentation showing you have the right to claim the child.
Most people will go ahead and go the first route.
Yeah, they'll file
I
the
need some
electronic.
refund now, so if I file the return based on what I can't get past, I'll get at least some refund, probably. And then once I get that, I'll go ahead and file the amended return. And the problem is that filing the amended return paper with the proof, or going the second route with filing the original return with proof, both of those are paper at minimum 6 weeks. Minimum.
Oh, 16 to 18.
And yeah, it's going to be worse than that, because what's going to happen here is that the IRS is going to see that. They're going to look at the documentation. They're going to look at the other person who actually had the claim and got the credit, and then send them a letter saying, hey, we need more proof. Give them 3 months to respond. And then after that, depending on what happens, maybe make a decision, or maybe query both parties for more information.
Did your one client ever get settled?
Yeah, 6 years later.
The quickest I've had is a month and a half.
Yeah.
But it was a grandparent-parent situation.
Well, that just tells me that somebody went ahead and, as soon as the letter showed up, went down and filed an amended return, took the kid off, and that was that. That's what I'm hearing on that one.
Yeah.
That's the best of all worlds.
Or or the person that filed the return with the child originally, when they got the IRS letter saying, hey, we need you to send us this documentation
They could.
to prove that you have it. They took the letter and threw it in the trash. And when the notification period elapsed and they hadn't heard back, the IRS ruled
Summarily.
thank you, on the person who provided the most information
Well,
and gave
here's
them
the
that.
other thing. With that person, I sent 75 pages proving that those kids lived in this home.
So
I sent 40 pages for her, and it still took 6 years.
Yeah, but it was the ex-spouse, wasn't it?
Yes.
Yeah. This was a grandparent.
All right. Well,
So I have a feeling that made the difference.
and the bigger difference on this is with the child, she got a refund. Without the child, she owed. And I told her not to pay it. And the IRS was actually getting a little hot and bothered about the fact that she's not paying what she owes, because we both know that
Right.
the IRS is going to give her the Lord knows why it took so long.
It's the IRS.
because she owed. If she would have turned around and paid the say $3,000 that she owed, the IRS might have been a little more apt to
Get the other done.
get the other done and see what happened. Because the IRS, if the IRS says you owe, you say you don't, but you go ahead and pay what you owe, and then the IRS looks at your stuff and agrees with you. Okay, yeah, you didn't owe. We owe you $1,500.
Plus the interest.
They will refund it all back. But if you owe, they get stuck on that narrow field of vision. You owe us, give us our money.
Yeah.
Give us our money. No, I have filed an amended return showing that you owe me $1,500. No, you owe me $3,000. Give me my money. Kind of like what's going on in Congress today.
Yeah.
We want this. No, this is what we're doing. No, we're not doing anything. We want this. So it may take 6 months.
If only one of the persons is the qualifying parent, or the child's parent, that person wins. If the parents file a joint return together and can claim the child as a qualifying child, the child is treated as a qualifying child of the parents, regardless of whether they claim the child or not. They should have. And you can see scenarios where they might not. Well, collectively together, maybe they made $80,000. But if I let my niece claim or my dad claim, he might qualify for earned income credit. So you can see why people would say, hey, I'll farm out the kid. And that happens.
Yes, it
They
does.
sell them too.
They'll sit, no, yeah, exactly. They know what they're doing. I don't need these kids. That's the other thing. You look at earned income credit. That fourth kid doesn't matter. Okay, well, hey, I'll let you claim my fourth kid. Just give me $1,000. That happens. That's totally illegal, but it happens.
We have that biggest problem at our office with our immigrant clients, especially the ones from Africa or whatever, where there's multiple families living in a home.
One interpreter.
They'll the same interpreter for 4 people coming in to file.
4 women.
So when what we do at our office is once we've established that these 3 dependents belong to this taxpayer, those are the 3 dependents we want. And if they come in and they say, well, I've got another kid, and the kid's more than 0 years old when we put him on the return, we tell them we need all of this information. We need the social security number, the birth certificate, and proof that the child lived with you. And we want the birth certificate. It's the one and only time I will not allow anybody to fudge on getting a birth certificate. If you come in with 3 kids and want to file a tax return, but you don't have the kids' birth certificates because they got lost in a flood, burnt up in a fire, whatever, but you come in with DCF documentation showing that the kids are on Medicaid, you're getting food stamps, I'll consider that proof that the kids are yours, because in my mind, the Department of Children and Families are not going to give you benefits for children they don't know are yours. And I can argue that with the IRS. That's a standing I can legitimately take. That's the only way I'll get around a birth certificate on a new client coming in with dependents.
Of course, if the parents don't file a joint return, the IRS looks at the longest period of time during the year, and if that happens to be equal, they look at the highest adjusted gross income.
Mm-hmm.
If no parent can claim the qualifying child, it's treated as the qualifying child as the person who had the highest adjusted gross income of the people trying to claim the child. If a parent can claim the child as a qualifying child, but no parent does, the child is treated as a qualifying child of the person who had the highest adjusted gross income for the year, but only if that person's adjusted gross income is higher than the highest adjusted gross income of any of the parents who could have claimed but didn't. They really want to keep that mom, dad, child unit together, or mother, child, father, child, however you want to look at it.
Mm-hmm.
They're trying to keep that primary unit together. I mean, sometimes you look at tax law and you see what the motivation is. And this is one of those places.
Keep in mind when you're answering on the dependent section, when you're putting dependents in, keep in mind when you're answering the relationship question, you're answering that question as it pertains to the primary taxpayer. So you have a couple come in and there's 4 kids, 2 are his, 2 are hers. All 4 kids are going to go on the line, but if the husband is the primary taxpayer, only 2 children are going to be listed as son or daughter. The other 2 are going to be listed as stepchildren. Even though the mother is on the return, the primary taxpayer can't claim her kids as his kids. They're his stepchildren.
But it doesn't, at the end of the day.
At the end of the day, it doesn't really matter either way, but the relationship has to be established as it pertains to the primary taxpayer.
We just do the marriage.
It depends on how they file. If the husband is listed as the primary taxpayer and the wife is listed as the spouse, her children get listed on the return as stepchildren to the primary taxpayer. If it's the other way, his children get listed as stepchildren to her as the primary taxpayer. kids aren't between both sets of parents filing a tax return, we have to establish what the actual relationship is. Otherwise, if two of the kids are stepchildren and you list all four of them as the children to the primary taxpayer, when these two separate, now they want to know,
They can't track it the way they'd like to.
right. So mom's claiming 2 kids, he's claiming 2 kids, which they're both their children, but now they're going to want to know, well, where's the other 4,
What happened?
yeah, what happened? Why are you guys not claiming all 4 of the kids?
And when they are together, can he claim his 2 kids and one of the
You
stepchildren?
can claim them all. Remember, they're filing jointly in Matt's
In my scenario, they're filing jointly. If they're filing separately, they're filing married filing separate, unless they haven't lived together for the last 6 months. Then at least one of them is, well, no, if they haven't lived together for the last 6 months, both of them are filing head of household.
It can get complicated, and that's just it. Remember that death or divorce doesn't sever the tie once you've established the stepkid.
Right. So,
But your biggest thing on that one, before that, is that this is where you might catch somebody in fudging the scenario a little bit, because if you look on there and the guy's name is Smith and the kid's names are Jones, and they want to put them down as stepkids, even trying to do it somewhat right, they want to put them down as stepkids.
Step.
Well, I'm running the narrative. Yes, okay. If you left off step, there's an automatic red flag. Well, you're a Smith, there's a Jones, what's going on here? But the other one is that there's a Smith, here's a Jones, you're saying, and there's another person on the tax return that you're filing married with, or not.
I have
Depending on the scenario.
4 kids and 4 baby daddies.
Yeah, but here's your problem.
but the baby daddies aren't on the return.
Right.
Just the
mom.
just the mom. So listing down that those are her sons or daughters is perfectly fine. But if you had a 5th man married to her, and he was the primary taxpayer, even though the 2 of them are married, he's the primary taxpayer. Those 4 kids of hers would have to be listed as his stepchildren. Now, if they got married, and because she's a returning client, we added him into the mix as the spouse and not the primary taxpayer, then we don't have to change anything on the return because they are all her children.
What I was getting at is that you're going to list somebody as a stepkid on the return. That implies that there's a marriage. So you make sure that you hammer that one out. It's like, okay, you have to be married to do this. And by putting it on there, as far as the IRS is concerned and the federal government's going to be concerned,
You're married.
you're married. That's stopped it a couple of times.
Well, this has just changed a little bit per year. With that new meme thing that's coming out about saying if you've been with someone for 5 years and he's trying to make us legally married, that's going to throw a ring to the cause in a heartbeat.
There's no such
know.
legal basis or statute for that.
But we're going to have questions, I bet you.
And here's the quick and easy answer. If you've lived with a man for 5 years and you guys have cohabitated in the house for 5 years and you've split the bills and everything else, if you want to come in and file a return together as married filing joint,
You can.
you can, because in the state of Kansas you would be considered common law married. No, it is not an actual physical requirement that for you to file a tax return because you've lived with a guy for 5 years, that you have to come in and file married filing joint.
But is that what that thing's saying, that he's
That's
Trump's
what
trying
that.
to forcibly make
No,
it?
that's the intention of the meme, is to scare all of these single mothers that live with whoever into thinking that now because they've lived with this guy for 5 years and he's slinging dope on the corner living off of the couch and she's providing the majority of support, that now she's going to have to claim him on a tax return.
'Cause a
and
lot of
no,
those things don't
they
make
don't.
sense.
And a lot of those things, that's your clue.
Exactly.
If it don't make
But
sense,
when they, I mean, and it's showing where Trump's running. I mean, you can see his mouth moving, but you
I
can
don't
say it's AI.
I don't
Yeah.
buy a lot of that. Here's
Right.
my source. If
When
I
I
don't
see him, I send him straight to him. It's like debunk
Yeah.
this, please. Make
basically,
it make
if I don't get that piece of information from either corporate or the IRS,
sense. Don't
it's a
believe
grain
it.
of salt.
Yeah,
It's just I needed a scenario because I have a feeling we're going to get asked a lot
Any-
of different things.
any scenario that I see on TikTok, Instagram, X, whatever,
Possibly not true.
if it
I
does,
assume
if
not
it does
true.
not conform to what I know are established tax rules and laws, I discount it out of hand. Period. Until I find documentation stating otherwise.
Agreed.
I'm so tired of all these advertisements of you can receive so much.
Oh,
yeah.
Oh,
stimulus.
the $4,018 a month from Social Security. Yeah.
Some cousins just went through and said, oh, well, we're going to get this. I'm like, don't believe that.
Right.
Yeah.
You're a tax preparer. Are we really going to get this amount? Don't
No.
believe it.
Look not.
Tom and Tina have a son, 13, daughter, 12. They cared for a 14-year-old nephew since his parents passed away 2 years ago. They provide the support for the nephew, can claim it as a dependent. Therefore, he's a qualifying child for the child tax credit. Tom and Tina have 3 qualifying children for a child tax credit.
Well, I really do that.
Well,
In the dependent section, you must provide the child's name as well as a valid social security number and say the relationship to you. And again, if you're writing down step, you're implying to the IRS that there's a marriage somewhere.
and keep in mind, if you put down, if you put down something along the lines of niece, nephew, whatnot, the IRS may send that your client a letter stating they want them to prove a relationship. We have one at our office that we had to do this with. When she came in, she'd been claiming her nephew because her sister was incarcerated, and the father was the biological father was dead. So, sister was taking care of her nephew. She actually had to bring in her sister's birth certificate, her birth certificate, and her nephew's birth certificate, and actually brought us in power of attorney paperwork signed stating that she had power of attorney to take care of her nephew. But the minimum that you're going to need is on something like a nephew is the birth certificate from the biological parent, your birth certificate, so that you can prove you two are related, and then the birth certificate of the child showing your sibling as their parent. Anything less, the IRS is going to bounce it.
If the dependent that you're listing on the tax return does qualify for the child tax credit, they ask that you check the box.
I never check.
Well, the
You
program
know,
does
do
it.
paper.
Program does it for you automatically, so we're not worried about that. The amount of non-refundable child tax credit on line 19 is reduced if your tax is less than your credit. Well, obviously. Your modified adjusted gross income is above the threshold for the filing status. Well, I don't have any indication that these
That hasn't changed.
numbers moved. Married filing jointly, if you make more than $400,000, you don't qualify. All other filing status, if you make more than $200,000, you don't qualify. Okay, sorry, I need to adjust that. You start to not qualify. Then it goes, after you reach that level, $50 down for every $1,000 over. So at $40,000, so at 40, if you're married filing jointly at 44,000,
440.
excuse me, yes, you're right. At 440,000, you're done.
240 for everything else.
Right. So, like we said, a married couple with 2 qualifying children filing joint return will be able to claim the tax credit of the whole thing with adjusted gross income of $400,000 because they haven't passed that threshold; they just reached it.
Yep.
2,000 at 440.
So they only lose one child.
Yeah, they lost the equivalent of one child. And at 480, they're completely done.
Mm-hmm. But figuring if you're making $500,000 a year, you probably don't really need
Child tax credit.
the child tax credit.
If you receive less than the full amount of the child tax credit because the tax on 1040 was less than the allowable credit, you may qualify for the additional child tax credit. And it did not change. Matt was right. If you don't get the full $2,200 per child of the child tax credit, you may qualify for the additional child tax credit of up to $1,700 for each qualifying child. I'm surprised they didn't address that, to tell you the truth. Because this is where people are, you know.
Yeah.
The other one actually doesn't change the equation all that much.
No.
Page 2.
No. And the thing that you've got to remember here with the additional child tax credit, and we get this question at least 5 times a season at our office, is, well, how come I've got 5 kids, 5 times 17 is 8,500, why didn't I get the full 8,500? Well, because you didn't have enough income.
Yes, that's the
But
other
I
problem.
have earned income. I understand that. But the way that credit is figured, they take your total income, their total earned income, they subtract $2,500 from it, and multiply that number times 15%. And that number is the total amount of additional child tax credit that you can receive. So if you didn't have any tax, you had 5 kids, and you can receive up to $8,500, but your 15% is $3,500, you only get the $3,500, and the rest goes bye-bye, because you didn't have enough earned income to qualify for the whole thing.
Right. Which Matt just said this slide right here.
Thank you.
Your additional child tax credit is the smaller of 15% of your taxable earned income over $2,500, just like he said. So deduct $2,500 from your taxable earned income, times that by 15%, that's your maximum.
Yep.
Or the remaining amount of the unused credit after reducing the regular tax limited to $1,700 per child. Some people can't get $1,700, that $8,500 that Matt was talking about. But you're going to have some income. Which means you might be not getting all this $1,700 because you probably used more of your child tax credit to pay for taxes.
Right.
So, you know, they're kind of protecting themselves there.
Right. If they just came out and said, you know, we're going to give it, whatever child tax credit you have left over, we'll give you $1,700 per child, period. Well, if you had 10 kids and you used $4,000 of the child tax credit to wipe out your tax debt, you had $8,000 of additional child tax credit left, and they didn't base it off of income, well, there's $8,000 right off the bat. And then you turn around and give them another $8,000 for earned income credit. The IRS is generous, but they're not that generous.
I mean, they realize that people will work the system to work as little as possible. And so they have to put in some of these checks.
Mm-hmm.
So if they have more than, let's say they have 4 kids, the first 3, they're the ones that get the 2,000.
No.
No, all of them qualify.
All of the kids qualify for the child tax
Provided
credit.
they're under the age of 17.
The only one that only 3 count on is earned income credit.
Yeah.
Yep.
Only EIC has the limit of 3.
Oh, so in addition to that.
Now, this is
here,
in addition to that.
Yeah.
that
This is
one
a whole other credit.
This is a whole
on
other
top
credit.
of the other one.
This is
Yes.
where people can using this and EIC, people get this is where some people can get over $10,000.
Just between the
18
two
is the
credits.
highest I've ever seen. Amy has a client that has 11 kids,
Wow.
biological.
Did you tell them what causes that?
Well, but they were fighting to get their kids back.
I believe that,
So I
but-
don't know how it all ended up with them getting their kids.
Non-taxable combat pay is counted in this to help your client get them, to help your military client get the maximum amount of refundable credit. And they deserve it.
Yep.
Military doesn't pay all that well, and of course, you were in a combat zone to get your combat pay. You're putting it out on the line, you deserve it. This is refundable. You can receive a refund. Whatever is left not paying taxes is cash to you. So hopefully, and what most people, what usually happens for people qualifying for the child tax credit, the additional child tax credit, is that they get whatever's basically kind of left over because their child tax credit paid for most of their tax.
The way this credit was originally designed was in the hopes that taxpayers with children, whether they're married or single parents, the child tax credit would wipe out whatever tax they owed, and then the parents would basically get back what they had withheld from their paychecks.
Mhm.
So the IRS really isn't out anything. The IRS is just giving you back the money that you had withheld from your paycheck every week, every 2 weeks, throughout the year that they were able to draw interest off of for the year. They're just giving you back the base.
Mhm.
That's what that whole thing was originally kind of designed for. And if it so happened that you didn't have as much tax as what you had credit for, they give you a little bit extra back.
Right.
Thank you.
Yeah.
Yeah. They're-
Marvin,
the IRS is not hoping that you run out and have 10, 15, 20 kids so you can get back thousands of dollars. Believe that.
So you don't get more than what you were deducted from the paycheck.
no, you'll get more.
You'll
You
get
a
more.
refund
But
up to
Just a
$1,700 per kid.
percentage of it.
if you think about it, if you're a single parent with 2 kids, you can get $4,000 or $4,400 in the child tax credit. Originally, it's designed to wipe out whatever tax you owe. So if you had $60,000 in income and you've got 2 kids, $4,000 or $4,400 of the tax that you owe is automatically wiped out. So if you only owed $4,200 in tax that year, that $4,400 wipes all that out, and basically what you had withheld from your paycheck every year is what your refund is going to be.
That was the original purpose.
That was the original purpose.
That's child tax credit in a nutshell. It was supposed to basically get your, like Matt said, it was designed to get your withholdings back. Then it was determined somewhere along the line that, well, let's see here. I mean, the working poor need a little bit more additional help.
So
and
if there's
so, hence, additional child tax credit.
So if there's anything left over, so if you had 4,400 and you only used 4 and you still had 400 of it, then they would go ahead and give you that $400 credit back, assuming you had the income for it, give you that back as a little extra, as a way of saying, hey, you're working, you're a single parent, here's a little extra.
But you don't get no more than that
No,
because it's a non-refundable.
no, it's a
additional
refundable.
child
The
tax
additional
credit
is a refundable. The child tax credit's not refundable. So if you had $4,600 that you owed the IRS and only had 2 kids, it would wipe out all but $200 of the tax you owe, and then that $200 would come out of your federal withholdings. So if you had $5,000 in federal withholdings, you'd get back $4,800, assuming that this was your only credit. So you'd get back all but $200 of what you had withheld throughout the whole year as a refund.
Exactly. And so keep in mind, there is an order of operation here. Child tax credit, additional child tax credit.
Mm-hmm.
Non-refundable, refundable.
All non-refundable credits come out first.
And this is true. This is something that will come up later. So if you have multiple non-refundable credits, child tax credit is used last.
Yes.
to maximize the amount of money that you could potentially get in the additional child tax credit. So when we talk about the adoption credit coming up, when we talk about the child and dependent care expenses coming up, those are used up first to pay your taxes before you start touching child tax credit.
You get a credit for putting into your 401k.
Yeah.
That comes out before the child tax credit.
All
does.
other non-refundable tax credits are used first.
Yep.
Before they start tapping into child tax credit, in order to maximize the amount eligible for the additional child tax credit. Marvin, Mod, taxable earned income 19.4. They have 2 qualifying children, and tax liability is 19.43. Because their tax liability is less than the amount of their credit, in this case $4,000, they may be able to take the additional child tax credit of $2,057. But their income, this might be limited based on looking at that 19,400 and taking that times the 15%,
Right.
or subtracting out 2005 and taking that times the 15%. So you're playing real close with the numbers there.
Well, and they did that slide a little bit of justice by saying they may be
Right.
able.
That way they don't have to update it all the time.
No, it's both of their earned income together.
Well, and that's what I'm looking at, is that doesn't make any sense because their taxable income is 19.4. Yeah, no, that's right. That would be right. If their taxable income is 19.4, you run that back to the tax table at 19.43, that's 10%.
Right.
So those numbers work. What you're not seeing here, because we're not talking about it today, they qualify for earned income credit.
Yes.
I have no doubt in my mind that at that filing status, that income with 2 kids, they qualify for EIC big time.
They're going to get $6,600. They're going to get almost the whole credit for earned income credit.
Yeah.
So they're already looking at about $6,600, $6,700 of a refund just from earned income credit.
Right.
Well, that's nice.
Plus another 2,057. So
Right.
they're
So
pushing
9
on our tax refund.
plus if the earned income had any withholdings, they're going to get all that back. Because you think about it, you've got a couple
Right.
with earned income of 19.4. It means they have no actual taxable income. Because once they put in the standard deduction for married filing joint, it's going to be 0. That don't get taxable earned income confused with taxable income. They made $19,400 of earned income. I don't like the fact that they put taxable in there, but
Yeah.
They've got-
should read is that the number that was taken to the tax table is 19.4.
well,
Their taxable income is 19.4.
it should read Marvin and Maud's total earned income is 19.4. Because their taxable income is irrelevant when it comes to child tax credit and earned income credit. Their adjusted gross income is.
Well, but it is relevant to give them some taxes. Have to have something to run back to the tax table with in this scenario to make additional child tax credit make sense. Because sure, I could come up and say, okay, 19.4, that's their tax. Well, hell, their standard deduction, 30 some odd thousand, they don't owe any tax.
Well, yeah, but
They don't
then,
have to file taxes, but they should because they're going to qualify for these credits. But at 19,400 of taxable income,
at
basically
$50,000, if that's their taxable income, 19.4,
Yeah.
that means their adjusted gross income was
a little higher than that.
$50,000.
Yeah. But see,
So they'll
Yeah.
get back all of that.
the
24
wording's terrible
Yes.
because it needs to be tightened up to say that. Because, okay, like I was going at 19.4, well, they don't owe any tax. So that should be 0. They should be eligible for, what, 17 or 24. Provided. So it's
Yeah, but
Liberty slides sometimes need much to be desired, but I've always decided that since they've basically always had the same flaws throughout the years,
they're designed.
it's designed for discussion.
Designed to make my job easier in extending the class.
There is another way to compute the amount of the additional child tax credit for with taxpayers with 3 or more qualifying children. They may benefit if they had Social Security or Medicare taxes withheld from their pay, were self-employed and paid self-employment tax. Well, that one doesn't matter anymore. Did not receive the maximum available child tax credit. The amount of your earned income is also a factor on this calculation of Schedule 8812. So there is a point where you might be so poor with so many kids that you start getting a refund based on your Social Security and Medicare taxes withholding. You might start getting some of that back. If you're limited because of the amount of your earned income and you have 3 or more qualifying children, complete schedule or part 2 of this. 8812. It might get you a little bit more. And we're not talking about thousands.
Mm-mm.
We're talking maybe, a couple, 20, 50. I mean, it's just not going to be huge.
Like the cherry on top.
Yeah.
It's whipped cream. John and Jane D. Doe are married. Filed joint return. Earned income of 90. Adjusted gross income of 95.1. Taxable income is 65.9. Total tax before credits is 74.47. 3 qualifying children, 12, 9, and 5. On their tax return, they will claim a child tax credit of $6,000. Remember, this is for 24 taxes.
Mm-hmm.
Their 8812 is going to look like this. So we're looking at figuring the child tax credit, the additional child tax credit. But we know that they're not going to have additional child tax credit.
Right.
Why? Because they owed $74 in taxes and only had $6,000 in credit.
But the upside is with the child tax credit, they only have a $1,400 tax liability.
And they probably have more than that withheld from their paycheck.
Yep.
So they're going to get a small refund. And at that income level, by the way, they don't qualify for EIC.
Nope.
Excuse me?
And because the kids aren't old enough, they won't have any education credits or anything like that we have to worry about.
Well, maybe they got child credit. They have a 12-year-old who's actually going to college. Who knows?
I suppose we could have a Sheldon on our hands.
Exactly. It's not outside of the realm of possibility.
No.
And actually, some schools are now giving college credits to kids.
Well, but
And they're
not
paying.
at 12.
But I would
High school
caution.
they are.
I would caution if you've got a parent with a child in high school, sophomore, junior, senior, that is taking college courses for whatever, I would caution against giving them the American Opportunities Tax Credit, give them the Lifetime Learning Credit.
Yeah.
Because
Yeah.
the amount of their 1098-T is going to
We
be
discuss tomorrow.
a few $100s.
Wednesday. not
Wednesday.
tomorrow.
Yeah, Wednesday.
Yeah.
We have
Next
one
class.
class.
Next class.
Don't we have just one lady that has a daughter that's doing that?
It's more and more.
College during
It's more and
high
more
school.
popular.
I had one, yeah, but she doesn't come to us anymore.
So
Her daughter's
remember when I
graduating.
told you about child tax credit being used last? This is the worksheet. These other lines up here represent other tax credits, other non-refundable tax credits. And then they're using the child tax credit last to maximize the amount. Unfortunately, they didn't qualify for any other tax refunds. They owe they owe $74.47 in taxes. They have a $6,000 non-refundable tax credit. They're going to use it all up
Mm-hmm.
and still owe. Now they're going to take example 1, except now we're changing into earned income of $62,620, adjusted gross income of $63,750, taxable income of $34,550. The total tax before credits is $36,885. So we owe $36,885 in credits. They qualify for $6,000 of child tax credit. They're not going to use it all.
Nope.
Running the worksheet
2315.
shows that they have $36.85 left going towards additional child tax credit.
3685. 5 is their tax before credit.
No, you're right.
They should have 2315
They
coming
have
back.
23.15 left over. Which there it is on part 2 there.
Okay. Hang on a minute. Come on, Liberty.
2315, they had a carryover of 5,100, which covered the rest of the 2315, left them with some refund.
Plus all of their all of their withholding.
And potentially some earned income credit. They're really close.
Yeah, 60, 63.
36.
No, 63 adjusted gross income.
34.
63,750
Yeah, 63,750.
is their adjusted
is their
gross.
AGI, but you gotta take the worst.
62, so they might get a little,
They might get a couple of bucks.
not much.
Okay, before I go on to the other dependent credit, I gotta talk about the elephant in the room. Something new from OBA. This is the opportunity to talk about it. Modestly called Trump account. It's a children's savings account effective in 2026 for children born in 2025, and then goes to 2028. Treasury auto opens a tax-free account for every U.S. child citizen born in in that time period.
That's not fair.
Well, suck it up.
Exactly.
That's $1,000 going to be staked by the government into each one of these accounts for each one of the children born in this time period. Additionally, parents, actually it just says parents, but I was under the impression that it could be relatives.
or whatever, yeah.
But let's just leave it at parents right now because that's the documentation I have. Parents can contribute up to $5,000 per year into these accounts until the child turns 18. Both parents must have a Social Security number. The child must have a Social Security number. Qualified withdrawals. Oh, okay. Yeah, that's a different. Qualified withdrawals, which would be, for instance, taking money out to pay for college, taking money out to buy your first home, taking money out to start a small business, will be taxed as long-term capital gains.
So what's the total deposit
$5,000 a year.
5,000 a year.
plus what the government's giving?
No, that's a one-time stake
Yeah,
of only $1,000.
The government's going to open the account with $1,000. The parents are allowed to put in $5,000 a year up to 18. So 5 times 18's what, 90? So there'd be $91,000 in the account if parents were putting in $5,000 a year for the life of that account.
Can you imagine these rich people that can afford to do it like that, and how they can
Well,
build their money?
but there's still some things that we don't know. First of all, we don't know how to apply for the account. I haven't a clue.
The way it sounds, and this is just an educated guess, they're going to use the the 2025 tax returns that are filed in 2026 to open accounts for dependents listed on those tax returns that have an age of 0 or maybe 1, because it's possible. If you had a child born February 1st
Yeah.
of 25 and you
But
didn't,
on the tax return, it's still going to be 0.
yeah, it's still going to be 0. Yeah. So any dependent listed on the tax return is 0.
With a valid Social Security number.
with a valid Social Security number. I'm going to assume the Treasury Department is going to open up a $1,000 account, and parents will probably get a letter from IRS Department of Treasury stating, we've opened this up, this is your child's Trump account, this is what you can do with it.
But the parent cannot cash it out until the child turns 18.
I don't know.
really have.
We don't-
enough
we
So
don't
there's
have
not
enough-
information to know.
We don't have enough information
Yeah.
because there's enough
There's too
ambiguity.
much play. in
And
it.
I've even watched a webinar. It was last week? It might have been 2 weeks ago about this. The guy specifically talked about this for 5 minutes, and he basically told me the same thing that I just told you. We don't know.
Yeah.
Yeah, 'cause it should earn interest, too.
Well, and
And
that's
it will.
just it. It's supposed to
Well,
be.
well over
It's
that.
supposed to be kind of a private 401k, is what somebody said.
Shane and I, looking at it, kind of think it's more on the
It's a
more
stock.
along the lines of like a 529
Yeah.
Because
Star
of the-
529 program.
because of the donation limitation and what it's designed for. I mean, it's expanded a little bit. You can't use a 529 to buy a house or to start a business,
But this one you can.
but this one you can, and both of those parameters are exemptions for an IRA.
Mm-hmm.
So if you were to pull $10,000 out of your IRA to buy a home, you can exempt that $10,000 as taxable income.
Except that if you're doing it here, you're not exempting it. You're taxing it long-term capital gains rates,
Right.
which could be zero.
Which could end up being zero.
But what we don't know is like you said, can the parents, if they needed to, take the money out? If the child dies, what happens to it?
Yeah.
We don't know that.
Well, I can see
We don't
where
know.
the first $1,000 evaporated, but the rest of what a parent possibly put in, they should be able to get back.
Well,
Or roll over to another child.
Well,
but
we don't
that's-
know.
This is
Yeah.
the federal government.
We don't know how to take the money out. Who do you go to? You go to the bank?
Right.
You got to petition the government? You got to go to the Social Security Administration? We don't know.
So who's going to hold all these accounts?
We don't know
We
that
don't know.
either.
And that's where it's going to start.
I
When
would,
they find the entity that can hold
As-
millions of accounts like that,
as an educated guess,
it's going to be government
I would assume the accounts would be held
or through Social Security.
would be held in trust by the Department of Treasury,
Mhm.
kind of like Social Security,
But separate.
but separate.
Yeah, the whole new.
It's a whole
It
new
is.
problem. And here's the other thing. If you go back and read this, I'm going to reread this sentence to you and see what your conclusion is. One-time $1,000 federal seed deposit for kids born 2025 to 2028. Social Security numbers for both parents required.
What if one of your parents is deceased?
You still have a Social Security number.
Or absent father,
Yeah.
That's your bigger problem.
Yeah.
mother.
They're wanting.
Or you don't
well,
know.
That's the biggest problem.
I don't know.
If you don't have the other parent because you don't know or don't want to say, you don't qualify.
That's the kicker then. That's what they're going to limit all that on. Because if you can't prove it, you can't prove it. You
Well,
don't
that's
do
the
it.
I mean, but in a nutshell, again, using tax law to try and modify behavior. What are you trying to modify here? We're trying to make you a family.
Well, I don't
Well,
want to get back with so and so, so don't
but-
force me.
Yeah, but here's the thing, and I can see this. I see where Shane's going with this.
Yeah.
I really do. But this is the other thing that I think it's going to run more along the lines of. If you think about it,
It's going to be hard to qualify for.
any credit, starting from this year forward, any credit that you want to claim that pertains to a dependent, you have to have a Social Security number for each parent listed on the return and for the dependent. So, even though it doesn't say it, I could see them, single parent, filing single or head of household with a child, if the filing taxpayer has a valid social and their dependents have a valid social, I could see them qualifying for that.
You would have to be very liberal on a conservative rule.
I would. But, I mean, because just with the parameters of it, it's basically saying the same thing as what the new parameters for child tax credit, earned income credit, any credit that pertains to a dependent is now holding. Everybody on a tax return has to have a social. Whereas last year, if I was married to a non-resident alien, as long as I had a valid social security number, she could be on my tax return, and my children have valid social security numbers. We were good. This year, she has to have a valid social security number,
Or you don't get anything.
or you don't get anything.
So how are we gonna track this year per year?
Since
Every year there's gonna be a printout that has to go with the.
I have no
tax return?
flipping idea. And
No
really,
idea.
at the end of the day, hold on to this. Hold on to this thought. As a tax
Because
preparer,
if you're putting money in it, you gotta have a paper for it.
well, yeah, but as a tax preparer, none of what I just said makes any difference. There's nothing here at the moment has anything to do with the tax.
Yeah, because there's no tax. There's
There's
no
taxable event.
there's
There's
no
no taxable event. $1,000 went in from the government to an account based on whatever criteria that we don't know about.
right.
That obviously hasn't been touched yet because nobody knows how to get it,
So it's just.
And if you put
documentation.
$5,000 in,
which you can't do until next year.
which you can't do until 2026. In 2027, unless something changes, you don't get to take that $5,000 as a tax credit on your 2026 return.
I'm going to
It's still
assume,
nothing though, really.
Yeah, but-
It's
but-
all trial.
since we're kind of following a bastardization between 529 and
And
401k,
401k.
Yeah.
I'm going to say that $5,000 falls under the 529. You don't get credit for it.
Right.
It's just there.
You just put in $1,000 that can grow tax free, provided that's taken out correctly.
Like a Roth.
Kind of like a Roth. The 529s act like a Roth in a lot of ways, and so does this. This reads like a Roth to a point.
So you think they're gonna make it taxable when they take it out?
Well, they said unless you take it out for those reasons, they'll tax it at long-term capital gains, which
Right.
might be 0, which might be 15%. But basically, what they're saying is, you take it out any other way, it's going to be regular taxable income and probably subject to the extra 10% excise tax.
So
That kid's got a taxable thing by the time
Well,
he turns 18.
if you have it,
It doesn't say you have to take it out.
right.
Oh, okay.
So if you do 529, at 18, your child decides he's going to go to Wesley, or he's going to go to WSU. He can pull money out of that 529 that you've spent 18 years
Bill.
putting money in. He can take money out of that 529, and as long as it goes for qualified education expenses, none of it's taxable. He could have $80,000 in that 529, and as long as he's using that 529 for qualified education expenses, none of that $80,000 is taxable. Now, no,
What'd she say?
you
What
would
about
use
student
you
loans?
would use the 529 income before you,
You
took
took
out
out
student
student
loans.
loans.
If you took out student loans and turned around and tried to do the 529, you're going to end up with a boatload of income that you're going to have to qualify,
Yeah,
that
you
you're going to
don't
have to
wanna-
pay for.
Yeah, you got bad advice if that's what you're doing.
Yeah. Take out the 529 first, and once that's drained, if you still need
More money.
more money, then
Then
take out your
student
loans.
loan.
But as long as you're using the 529 for qualified education expenses,
Which we'll talk about
in a
in a future chapter. It's,
Right.
We're not just throwing something out there that we're not going to talk about on this one.
right,
There is a chapter about this. But to go back, here's the thing, and I talked to Matt about this a little bit. You know, we have different takes on it. You know his position. I sound a lot worse than I actually am, but still, the Secretary of Treasury came out and said, this Trump account is the beginnings of privatization of Social Security. So if I take that and extrapolate, I'm saying that there's no child turns 18, that money can stay. That money can stay until the kid turns 59 and a half.
Yep.
And be treated as a regular 401k. That's what I'm getting out of
So
that.
it's still gonna
With that
be
statement,
interest
that's what I'm getting.
So if the parents did all that,
so it's like a government prompted savings account for
Kind
of.
education or whatever.
Kind
For
of.
education or for retirement.
right? So if mom and dad opened that account and they put into it every single year at 18, there's nothing in there that says the child can't continue putting into it. So if the child decides I'm not going to go to college, I'm going to go in the military and I'm going to spend 40 years in the military for my career, and he puts $5,000 a year into that account for the next 40 years after we've already done 18 through mom and dad, grandma, grandpa, whatever, then when he retires at the age of 60, Not only will he have his military pension, he'll have that. Now,
And the social
that
security.
and his Social Security.
If there is any such thing, remember what the Treasury
He's trying to
says.
get away with that.
You know, what the Treasury Secretary was hinting at is that this is the beginning of privatization. It might not be there anymore. You don't know.
Yeah,
but
by,
that's at least 20 years down the road.
by the time
$5,000 pre-tax or after
No tax.
And you-
it would be after tax.
You're not going to get a tax benefit for putting in.
Yeah, you're not going to get a tax benefit because it'll be after tax money going into that account.
tax? So you cannot change your W-4 and say, well, $5,000 for this account.
No.
No, it would have to be a separate. It would have to be a separate allocation to go into that account.
Well, first off, you have to have a child that qualified at the birth age.
Yes.
Right.
But, so starting this year going forward for at least until 2028,
So put it this way, none of the kids on our returns this year qualify for that.
No,
the ones that will be born will qualify. The ones that are born in
Or at the end of
25,
the- Yeah,
no existing dependent on any return across Liberty tax period
qualified.
qualifies for that account.
right. It's going to be
Only new dependents this tax season.
the ones that are born in 25.
Before December, I think.
Well, after December 31st, they'll just be on the next year tax return.
Till 2020. So
Eight.
it's just
If they're born
25 through 28,
25, 26,
At this time.
27,
Oh, yeah.
if they're born 25, 26,
Sounds
27,
like a-
28, they're going to be eligible for that.
Sounds like a gestation period to see if it's even gonna work.
That's one interpretation. Matt thinks
What'd
thinks
she
I'm
say?
being too conservative on my rules.
Having two parents.
Oh,
I think it'll be more
but
dependent
this
on
world's more one
how the
parent than
return
two.
is filed because that's what
I
I'm assuming they're going to go off of to determine eligibility.
It'll be interesting to see what actually happens because I can make an argument both ways. Matt is right. He can make a valid argument based on existing IRS rules. I can make a valid argument based on what's going on nowadays. If you have an I-10, you don't qualify for squat. And so if, Jose's the father, not to be horribly racist, but just to throw it out there,
Just a little.
this is the problem, You try and paint a picture, but you don't want to paint it too bad. But I can see that argument too, because right now, if anybody's an I-10, you don't qualify. I-10, you don't qualify.
If you have a
So
resident,
you have to prove a social security number in one interpretation of that sentence.
Well, is that another way of getting people to register?
We don't know.
but here's the thing:
Sounds like an incentive.
it's not so much. It's not so much that. The way I'm understanding it is they're trying to eliminate non-citizens from being able to claim tax credits.
Right.
And let's just forget about Mexican, Latino, whatever. If you are a resident alien or a non-resident alien and you have an I-10, okay, an identification or individual tax identification number, and not an actual social security number, you don't qualify for this. Doesn't matter what your race is. If you are a resident alien or a non-resident alien with an I-10, it automatically exempts you from this program. And it exempts you from child tax credit, earned income credit, everything else.
Right.
But they can apply for one, right?
They can apply for a social security card, but in order to get a social security card, they have to be a U.S. citizen. They have to be at least a naturalized U.S. citizen, which means they had to have come into the country through the immigration system,
Legally.
held their green card, went
The
in,
parent.
and
that's not the
became-
child. If the
passed the
child was
test,
born in the United
and
States,
became-
they're a US citizen.
Yeah.
But here's the thing, though. With the new rules, it doesn't matter if you have a social security number. If your husband has an I-10, you don't qualify.
You don't get the Trump account.
You don't get the Trump account. You don't get the child tax credits. You don't get the earned income credits.
Yeah, but we as single mothers.
That's what I'm saying. That's
yeah,
why
it's gonna
I
be
think.
hard to-
That's why I think the way that account is going to be set up, it's going to be set up dependent upon how the return is filed. If you're a single
yeah.
mother filing head of household, you're the only one on the return. The child is the only one on the return. You're not filing married filing separate, married filing joint. If you're single or head of household and you're the only parent listed on the return, and your children all have valid social security numbers, and you have a valid social security number, until I'm told otherwise, I'm going to assume that that is probably how that's going to work, because that's the only way they're going to be able to get information.
On a side note, it almost sounds like it's gonna bring more business back in the Liberty tax. Because
You
people,
can't do that.
people are gonna get confused trying to do their own taxes, so it's almost like,
Oh, no. They're gonna attempt it, screw it up, and then come in.
that's what I'm saying, it's gonna really get people to come.
Oh,
It
on
doesn't-
on a side note of the side note, it does, Liberty's notes does say grandparents.
It does?
Yeah.
Okay.
Can file for this for their kiddos?
No, not file, can contribute,
Can
Oh.
contribute.
but that's a $5,000 pool, just like on the 529s.
But you don't have to do that amount, you can put any amount in?
Up
Less than
to-
5,000.
Up to 5,000.
But no one person can put in more than 5,000, and collectively, you can't put in more than 5,000. So if Grandpa puts in $5,000, you're done.
Yeah.
Hey, thanks, Grandma.
Well, but and going back to the other thing, I'm hoping I'm wrong, but I'm taking the more conservative view
'Cause then
is
account
that if you don't
becomes
have two
6
social
grand.
security numbers, you're not getting this.
That's still gonna bring a lot of business into Liberty tax.
It's
Or a lot
very
of questions.
potential. I'm not saying it can't be.
Or
A lot of
a lot of
questions.
questions.
I'm hoping I'm wrong. I am, truly. But
And I'm not going to be telling people what I think is going to happen. At this point,
at
if
this
somebody
point, my
asks,
answer is we don't
don't
have
know.
the answers.
we don't have enough information. We know how it reads, and how it reads leads too many pathways open
So
for them to
let's
go.
say she's sitting at the office all by herself in the morning, so when she gets a phone call during tax season, she can say, we don't have enough information.
Yes,
We
the-
can say that the IRS has not come out with enough guidance to give us an answer completely to what your question
I mean,
is.
I'm just
Right,
making
well,
it easier for you.
All
to
we know is
follow.
that there's a Trump account, $1,000, and that's all we got. We don't know how to get it.
yeah, cause they're gonna have some paper printed at the end of the year, cause you got 12 months to deposit a lifetime,
I mean-
yearly to do that, and who's
We-
gonna keep a running tab?
Well, and that's just it. And I'm thinking, Matt says Matt has a perfectly viable scenario. They're looking at the tax return. They're looking for dependents, children, 0.
So they're not.
I'm
on the
looking-
taxes.
I'm saying that they're going to look at Social Security Administration for new applications with that
And
birthday,
attach it then.
and then create it then, because off the birth certificate they might have both Social Security numbers. And if you don't have it there, you don't get it. It's a possibility. Don't know.
Right,
I mean,
too many scenarios.
they could turn around and they could take the tax return and say, okay, I've got Suzanne Bromley, here's her social. I've got Joe Blow Bromley, and here's his social. And then go to Social Security and say, and cross-reference, give me the information on Suzanne Bromley, give me the information on Joe Blow Bromley. Okay, well, here's Joe Blow's application with his birth certificate. Here's Suzanne Bromley's application with her birth certificate. Super. Now, if there's a dad listed on that certificate, they may do like Shane is saying and say, okay, well, we need dad's social. We need to see if dad's a citizen. And if dad does come back as a citizen, then everything's fine. If there's no father listed on there, then I'm going to assume they're going to run my scenario and just say, okay, there's no father listed. I have a single parent with a valid social. I have a valid child with a valid social, and they'll start the account. But if the father comes back
All
as
this
being
discussion of one
a
little
non-resident alien,
an S.
then no, the account's out.
Talk about sperm donor.
No, parents.
Now, if you
If
have
they left the S off, we wouldn't be discussing this for the past
I
20
know, but
minutes.
I'm just saying, if you have two females that adopt a child and do a surrogate thing, they're not gonna have a social security number for that other parent.
Not gonna know who it is.
Exactly.
Oh,
No, I'm-
and the question is a valid one. If I adopt,
Same sex.
That's what I just said.
no. Let's just
You
run it.
adopt like me, We don't know my parents' socials.
We could say that. We could go that way. We could also say, well, what happens if I adopt an international? I adopt that
yeah.
Romanian,
Yep.
and she's 0,
Mm-hmm.
and I go through all the legal documentation. She has a social security number. We have social security numbers, even of the same sex. They both have social security numbers. One's going to adopt, most likely. I don't know about the surrogate as opposed to maybe just, there's lots of different scenarios to make that. Okay, so
It's just more forms to add in, but.
more questions that we don't have answers to.
Wow, he likes making some serious messes.
So starting 2026
Is
we're gonna
when
start
we
seeing-
might actually have some answers.
and we may get, let's say it's a qualifying family, and one of the siblings was born 2024 and the other one 2025.
Only one sibling.
Only one
Only
sibling
one
qualifies.
is gonna be,
Yeah.
that's gonna
The one in
be
24 gets squat.
Yeah,
a
if you have,
nice family relationship.
If you-
And there's a possibility that the one in 29 also gets squat.
Money in, it's only
I know.
$1,000 at 18.
it's, well, plus whatever interest it earned.
Because the 529 is like a 401k, so theoretically it should grow.
So the federal government's going to put
So
$1,000 in.
yeah,
If you
this
never
Trump
contribute
account-
to it, you'll
This
have
Trump
18
account
years
is
interest.
also going to be a market account.
Yep.
So short term, it might be worth only $900 one day.
And-
Long term, it should grow.
And
For any kid later on, that could be,
and every year the parents might get a 5498,
Yeah. Just saying how much
showing
is
what
in
the
account.
fair market value of the account is every year.
So,
That
We
might
don't
be the
need
way
it
they
though,
keep
right?
track of that.
but we're not gonna be able to use it because it's not the parents, it's the child.
well,
Well,
but,
you wouldn't use a 5498 anyway. It's an information piece.
Right.
yeah, but I mean, I know what you're saying is that okay, mom and dad took money out of the child's for the child because as a minor child can't
It's
touch
gonna
it
be
yet.
money laundering for some people.
It's a problem. We have to. There has to be more rules, and we don't have enough.
Because if you have a set of twins, good lord, that's a lot. Triplets, quads, I mean, they're happening.
I know. Go with Sergio's scenario. Mom's pregnant with twins, triplets, quads. One's born 11/50, December 31st. The other two were born
You read my mind right now.
something else, January 1st of 2025. One twin is qualified, the other one isn't by 10 minutes.
I wonder if they'll let it slide because they were born on the same.
Probably
No. It'll be determined by what the time
or
of birth is.
Even the
listed on
worst
the
case
birth
scenario is
certificate.
that he beat the hell out of her. She doesn't want to do anything to give her the guy any clue of A, that there might be a kid, and B, where they're at.
Yeah, especially,
That's why I'm saying I'm hoping I'm wrong somehow.
especially if you're dealing with the domestic violence.
Exactly.
Yes.
Right, everything else.
All right, so other dependent credit. Now we had a nice sidetrack for a while.
Yeah, but it makes a lot more sense. And we weren't aware of it either.
No. I mean, that's just it. This is the first time that most of you heard about it. The only
Exactly.
Matt and I have heard about it before because we read this is all something that Liberty put out a couple of months ago.
Well, when the one big beautiful bill came out, was signed into law and came out about a week afterwards on the LRC. Liberty Tax posted the paperwork Shane's reading from.
Yeah.
And I printed off the paperwork at the office and read through it because it directly affected what we were going to be doing.
Yeah, some things are useful now. We've been giving you updated numbers as much as we can.
Yeah.
But this is something that's totally new and really based on most of what we're talking about. This is the only thing that's really that new. Basically, everything else that was on here is just modifications of things you already knew about.
I think he was wanting,
CD triples.
yeah.
All right, so other dependent credit. If the
The big
person meets
torch
all
on
the
the door
following
wasn't an
conditions
indicator?
to qualify for the other dependent credit.
Big torch on the door with
The
They
person
still come in.
The person is claimed as a dependent on your return. To get the other dependent credits, you must have a dependent.
Yep.
That makes sense. The person cannot be used by you to claim the child tax credit. Well, if I could claim the child tax credit, they're a qualifying child. I don't want the other dependent credit. Person is U.S. citizen, U.S. national, or a resident alien. Residents of Mexico or Canada do not meet the definition of a qualifying dependent for the purposes of this credit. So basically, you must have a valid Social Security number to qualify for this credit. Not U.S. Social Security.
Not U.S. Social Security number.
I don't know about Mexico. The answer to your on the Canadian side is yes. It's called the SIN number, Social Insurance, and it's structured the same way. It's a 3, 2, 4 format. So if you look at a Canadian return, or if you look at Canadian documentation,
It looks a lot like ours.
it looks a lot like ours. They have a T4, which is a W-2. Yeah, no, and I have Canadian clients. Yeah. So, yeah, our biggest thing is making sure,
That's my own.
reading the stupid thing because it's in, half of it's in French, and I don't. And the other one is converting all the amounts on there because those are Canadian dollars, not U.S. You have to convert.
Gonna lose the money.
It's not nearly as much as what you thought.
For the other dependent credit, there's no age limit for a dependent who qualifies for this. You can list somebody 99 years old on your tax return as a dependent on your return and qualify for the other dependent credit.
You've got grandma living in the basement, you're taking care of grandma, and you claim her as a dependent on your tax return, you get $500.
Actually, you don't even have to have grandma live in the basement. Grandma could be living at the old folks' home. As
Yeah.
long as you're the one paying the bills.
Yep.
You claim grandma as a dependent on your return, you've met it.
One month.
To qualify for the other dependent credit, the qualifying person must have a Social Security number, ITIN or ATIN, which I think that's old information. It's just Social Security number.
Mm-hmm.
That's 24. This is 25. So you need a Social Security number. Carla has a child who would otherwise be a qualifying child for the purpose of the child tax credit, but the child has an ITIN. No, you couldn't do that.
No.
The rules have changed. Let's see, does this work? Randy and Sally, joint return, both have Social Security numbers, tax liabilities 2000. They had 3 qualifying dependents. Mark 18, Social
Nope.
Security number.
I-10.
Nope, we
Katie
have
May has an I-10. They could for everybody but Katie May. Katie
Yeah.
May wouldn't qualify.
not.
Mark
So-
can
Yeah,
and
stupid
Grandma
Mark
can.
can. Yeah, Mark can and Leanne can, so that's $500 each, a potential tax credit of $1,000.
Yep.
Non-refundable.
But if they apply for one, then she gets
If Katie May adopted a child who has an ITIN, which I don't understand why,
Yeah,
as
if
an
she's an adopted
we're only
child.
stuck at ITIN. So yes, run down Social Security Administration and apply for
a
at
social-
least an ATIN, if not a Social Security number complete. Which you have the papers. They should be a social. They
It
should
should be a social security number if the adoption's complete.
right. Run down and get one. You have until the end of the extension period to, just like any other rule.
Yeah.
So yeah, Katie May makes no sense whatsoever.
No. Because if the adoption's complete, I mean, she should have had an A10 if she was living with Randy and Sandy while the adoption process was going through. She would have had an A10 or an I10. But if the adoption's complete,
she should qualify for a Social Security number straight out. Head down to Social Security Administration.
yes,
With your adoption paperwork and get this taken care of.
yes.
And then, by the way, Katie May won't qualify for the other dependent credit.
No, then she'll be a.
No, she's 15. She'll qualify for child tax credit.
yeah.
So instead of 500, you're now looking at 2,200.
Potentially. So,
So please
Yeah, it's
go
worth
get
your
the
time.
SSN.
it's worth your time.
Yeah.
I would do it.
Please go down and get the
Because they're
social.
free, aren't they?
Yeah, you don't have to pay for a social security number. You just have to provide valid documentation of identity.
Yeah.
Alright, so the other dependent credit's not that big a deal. I mean, basically it's just $500 of non-refundable for people that basically have aged out. Now, you will get this, and so, you know, Jack is claiming his girlfriend Mary and Mary's daughter Samantha. There's $1,000 of other dependent credit, non-refundable.
Now I got a question on that. Why wouldn't he have to have an 8332 from the missing biological parent of the child?
Because to qualify, remember going back to the qualifications for other qualifying dependent.
The
Has to live there the entire year.
yeah.
So you with 8332 from the other parent, it's not valid because he doesn't have a claim because the residency is not met.
the girlfriend's child isn't a qualifying relative; it's a qualifying member of the household. Completely different. It's just like
Qualifying
can you claim your cousin as a dependent on your tax return?
No.
If you lived with you all year, he can. If he moved in December 30th, and the following year he's still living in the house, and you've been supporting him, he is a qualifying member of your household. You can claim your cousin as a dependent,
Right, you didn't make over $5,000.
provided he didn't make over $5,000, and you'd get a $500 dependent credit because he's a qualifying member of your household. That's what the girlfriend is a qualifying member of the household. They're not qualifying relatives. There's no relation. So you've got when you're talking about these credits, you've got qualifying child, qualifying resident, and qualifying member of the household.
So they work too. They file single and you file head of household like we talked about last.
No, he would file single, and he
Claim
would
Mary
put his
and Samantha.
girlfriend and his girlfriend's daughter or son, whatever, his girlfriend's child, on the return as a dependent. So if you were living with your boyfriend and your boyfriend's child, you guys aren't married, you're not going to get married, you guys are just living together, and you guys have lived together all year, and he doesn't have any income because he's been sitting on the couch playing Call of Duty all year long, while you've been working and taking care of everything,
And you were fine with that.
you would come in and file your tax return single, because you are, and you would be able to claim your boyfriend and your boyfriend's child on your tax return as a qualified member of the household, and you'd get $1,000 non-refundable credit to go against your tax liability
Yeah, 500
to help offset it. You don't get child tax credit, additional child tax credit. You don't qualify for earned income credit or anything else.
Or no head of household.
Yeah, it doesn't qualify you for head of household. You can't come in and say, well, you know, my boyfriend and his child have been living with me, I want to do head of household. It doesn't qualify you for any of that.
You
You're
have to-
still single.
To be head of household, you have to have a relationship.
Yep, you have to have a qualifying child or a qualifying relative. They're just qualifying members of your household. Completely different, but still eligible for a credit.
So the scary thing about due diligence, again, is just it's in play when you have refundable credits. And we talked about one today, the additional child tax credit.
Yes.
Now it lists the other two non-refundable credits, but really this is in play. Due diligence is in play today because of the additional child tax credit. We haven't talked about the American Opportunity Credit. I think that's next time. I think.
Yeah. Well, technically, due diligence comes into play whenever any credit is involved. Almost any credit is involved,
Yeah,
especially when it deals with dependents.
but they really get a big bone of contention when it's refundable.
Yes.
If you pay for someone to care for your child or other dependents so you can work, or you may be eligible for the Child and Dependent Care Expense Credit.
Yeah. That changed this year too.
Did it?
Yes, it did. Went up to 50% with
Oh,
a
yeah,
plateau
okay.
at 35.
Yeah, you're right. But the generalized rules don't change. It's still
No.
non-refundable. It was a refundable credit 1 year, 21.
Yeah. Yeah, and they, doggies.
Came out of the woodwork on that one.
Oh, buddy.
Yeah, because typically this credit only qualifies one child for $3,000, 2 or more children for 6. So if you've got 2 kids that are in daycare, so you and your husband can work, you can only claim up to $6,000 of what you've spent. Now, my daughter and her husband spend about $16,000 a year. They can only claim up to $6,000 of that, and up until this year, because of their income, they only got 20% of the $6,000. So out of the $16,000 that they paid for childcare, they got a $1,200 credit.
So should I skip all the slides that Matt just rattled off?
Yeah. I'm ready to go home.
However, Matt was wrong about one thing. The changes, there are changes, they don't take effect until 26.
Tax year 2026 or tax year 2025?
Top box, last line.
Yeah.
Right, starts in 2026.
I interpret that it's going to be the 2026 tax year.
See, I don't. I think that's the 2025 tax year.
Okay,
See,
well,
I'm interpreting that starting in January 1st of 2026, this
2026.
goes into effect, which means the tax return that we file in 2026, even though it is the tax year 2025, those rules are going to apply.
well, we'll see.
Yeah, it'll be a guessing game.
Again, it's another one of those guessing
All right,
games.
I'm taking bets.
It'll be one of those things that we'll be able to check on when we get our first client that's got
Yeah.
that
All
credit.
2441.
Yeah.
To satisfy all the following requirements, you are eligible to claim the credit for child and dependent care expenses. First, qualified person. The care is for more than one or more of the qualified persons. A qualified person for the child and dependent care credit is a child that was under the age of 13 at the time that services were provided, or a spouse who's mentally and physically incapable of self-care and lived with you for more than half the year, or an individual that you could claim as a dependent who is incapable of self-care.
I wish they'd just change that and do like they do with everything else and say under the age of 13 at the end of the year.
Yeah, that was... All right. Dependent person is a person other than you or your spouse who can be claimed on your tax return. To be a dependent, a person must have a qualifying child or a qualifying relative. Qualifying child is really what you need here. It's the one that causes the least amount of questions.
Yeah.
Claire and her husband Tom live together the entire year. Claire pays someone to care for Tom so she can go to work. Tom is physically unable to care for himself. Tom is a qualified person for this tax credit. But my bigger question actually is where is this most beneficial? Because there's another place that I can put these expenses that may or may not help.
Schedule A.
Schedule A. If Tom is incapable of caring for himself, and it's the husband, therefore he has a medical disability, and these might be qualified medical expenses. You'll have to look at it both ways. Which gives the better result? Schedule A or the tax credit?
So on Schedule A, you get to write off all his.
Medical expenses.
And that would include
Supplies
in-home
and
care.
care.
Yes,
Yes.
all of that.
Yes, that's a valid medical expense.
Diapers, bedpans, the
Yeah.
hospital bed that they put in the living room.
You don't want your husband going to a nursing home, even though he probably really needs it. Instead, you decide you're going to have nurses come in to take care of him. Those are all qualified medical expenses you can put on Schedule A.
It's cheaper to stay home.
It might be. I mean,
Sometimes.
It's $8,800 a month at Azteca or Azure
Right,
for one person
right.
monthly.
But how much are you going to pay to have CNAs, registered nurses, physical therapists, everything? It's not going to all be covered under insurance.
Not all of
Most
it.
of it is.
Blair pays someone for her son, to care for her son, Eddie, while she works. Eddie turned 13 on August 10th. This is a stupid credit, so up until August 10th, she can write off the expenses. After August 10th, no such luck.
That's why I hate this credit.
This is the stupid credit. It's the only credit that is dependent on the age up until the day of, as opposed to what the age was at the end of the year.
I wish they would change it. I really do.
To be more consistent, I wish they would change it. Maria, not mentally able to care for herself, she lived with her brother for more than half the year, and he plays someone to care for her while he works. He supports Maria, claiming her as a dependent. Maria is a qualified person. Her brother can claim the credit using the expenses he paid. Again, look at medical expenses also.
Mhm.
It might help, it might not. And by the way, Maria also qualifies for the other dependent credit.
Mm-hmm. And qualifies the taxpayer for earned income credit
Possibly.
if they qualify, if they don't phase
They never
out.
had a household.
Definitely.
Yeah.
In the case of divorce or separated parent, the child is treated as a qualifying child, the custodial parent, which makes sense. The whole idea about this credit is for somebody to work, to go to work. And it's only a problem if they live at your place and you got to pay for daycare so you can go to work.
And this is the only case in 8332 does not matter.
Well, among other things, I mean, it doesn't matter on the EIC, it doesn't matter
Yeah.
on the head of household, but it doesn't matter here either. Can't sign this over, and even if for some reason the ex-husband is paying for it, he doesn't get to write it unless the child is with him. He could be paying for daycare, but the child lives with mom. She gets the credit.
Yep.
Again, IRS is kind of, it sounds weird, but they're kind of loose on this across the board. They don't necessarily care where the money came from, just that it got paid. For the most part. There's some exceptions, of course. There will always be exceptions in the IRS world. Like I said on day one, there's no black, there's no white, there's just gray. Some are pretty dark gray, some are pretty light gray, but it's just gray.
A lot of it.
Frustratingly amount. Alan and Samantha divorced. Their daughter Judy, 11, lives with Samantha for 9 months of the year. For the remaining 3 months, she lives with Alan. Samantha signed in 8332. She pays for child care for Judy so she can go to work. Because she's the custodial parent, Samantha can treat Judy as a qualified person for the child and dependent care expenses, even though Samantha cannot claim Judy as a dependent. Alan cannot claim the credit, even though he claimed Judy as a dependent. And like I said, even if Alan actually paid for it, Samantha's the one who gets to write it off.
Well, because they don't say if he had to pay for childcare when she was with him.
It's irrelevant.
Yeah.
Mm-hmm.
We assume that she did,
Right.
for
But,
Judy's sake.
but in the divorce, if the judge said, Alan, you're going to pay for child care for Judy so Samantha can go to work, at the end of the year, when the daycare submits their invoice, they're going to give it to Samantha.
Unless dad has his own.
Well, they might issue it to both, but the only one that's going to be able to use it on the tax return is
The custodial
Samantha because she's the custodial parent.
Yeah.
Even if Samantha says, look, go ahead and claim Judy this year as your dependent, he still doesn't qualify for it because he's not the custodial parent.
All right. This credit sucks, by the way.
Yes, it does.
It's terrible on many fronts. One of the ways it's terrible, it's not very big. So let's get into why it sucks. To claim the credit, you and your spouse, if filing jointly, must have earned income through the year. Well, since the nature of the credit is to be able to go to work, that sentence actually makes sense.
We're going to bring back an old rule that we learned about 3 weeks ago when we did income.
You must have earned income credit, and if you're married filing jointly, both of you must have earned income. Why? Well, because they're not going to reward the child dependent care expenses just because mom needed a break. She's a stay-at-home mom. We have a babysitter one day a week, so mom can relax.
Go to the spa, get her nails done.
Yeah, have a mom day.
God, you got a million.
I know, right?
Hey, this is not my tax law.
You stay home then.
I did.
I know you did. But you're not.
He
Very
he skirted it because he had earned income. Now, yes,
I
the
did
credit is
because I was
based
doing
off
taxes.
the credit is based off of his income, not Crystal's, but
It was terrible, but yeah. All right.
it was better than the alternative.
In addition to employee compensation, earned income includes net earnings from self-employment, which is the way I qualified because I was doing taxes remote or with Jim at the time, not here with Jim for most of it. So I had self-employment. Earned income does not include earnings while incarcerated or in a work release program. Well, you don't have a kid at that time anyway, so that actually tracks.
Mm-hmm.
They're not allowing you to have your kid in the big house. Spouse is treated as having earned income for any month that the spouse was a full-time student or physically or mentally incapable of self-care. This is where it gets really fuzzy. To be considered a full-time student, the spouse must have been a student for some part of each 5 months during the calendar year, which is actually a consistent rule. We've seen that rule before, so that's nothing new. This is what gets interesting about this part of the credit. The income, which is fake, for the non-working spouse is considered to be at least $250 with one qualifying person, or $500 with two or more qualifying persons for each month the spouse is a student or disabled. Because we'll find out later that one of the determining factors of the amount of credit that you're going to get is going to be based on your earned income of the lowest earner. The lowest earner at this point could be $250 a month.
And underline the words student or is disabled.
Yeah.
If you've got a deadbeat sitting on your couch playing Call of Duty all year long, his income is zero.
Nope.
That's your income. That's the earned
don't
income
qualify.
you go off
You
of
don't
for that
qualify.
credit.
Yeah, you don't qualify.
Even if you made $30,000,
You don't qualify.
because his income was zero.
But if you're claiming dependent, like let's say for example, someone's staying with you, like your kid, and they could move, but they don't want to because they're not over, like maybe they're 21, 22, they're just not ready to move out. But if they
Spouse. This is only for spouse.
Yeah, this is
Okay.
only for spouse.
So if we go back to the scenario kind of like we were talking about before on the other dependent credit where we got her and her deadbeat boyfriend and the deadbeat boyfriend's son all living at your place, she doesn't qualify for any of what we're talking about because she's not related, for one,
to the child.
to the child, so she didn't qualify there. So,
And
he doesn't qualify for this just because he's not disabled, he's just deadbeat.
in your
This is-
This
in,
is only if you earned under 5,000 though, but what if they're working and they made over 5,000?
Then they should claim their own child.
Or like, what if it's your own kid?
if you
Or you
if
guys are all just living together.
Okay, well, again, then I can't claim that person because they made too much money unless I have a good reason.
right.
There is, they're disabled and they just happen to make $5,000. Maybe they made $5,000 before they came disabled. That's a possibility. So I mean that exists, but and then I could possibly qualify for the credit because depending on all the scenarios, all the stars would have to align, but I could qualify for the credit based on that scenario.
Can
Again.
you marry them on the tax return and then it would work out?
Well, that's another possibility, but again, then you're really opening. I mean, if I'm head of household, I don't care what, because I don't have a spouse,
Right.
so it doesn't matter. It's just based on my income.
Right. And this for this credit, it wouldn't, if you had a child living at home, unless that child's disabled and you're paying for someone to come in and take care of that child while you're at work, you're not going to qualify for this credit anyway. If you've got a 20 or 21-year-old child who's still living at home and hasn't moved out just because they're not ready to face the world yet, and they've made less than $5,000 that year so that you can claim them as a dependent, you're not getting any of this anyway. Because they're not going to daycare, they're not going anywhere else.
Yeah, you're not paying for somebody to come in and
They're
watch them.
considered an other dependent,
Yeah, just
Right.
you just get the other dependent credit.
which is a $500 non-refundable credit.
I hate talking about that last thing because it's confusing as hell.
It is,
Barbara and her son Grant, and this is going to be kind of a reoccurring scenario through the rest of our chapter. Barbara and her husband Grant paid child care expenses for their 3-year-old daughter Susan. Barbara worked as a lab tech. She earned $50,000. Grant was a full-time student from August to December, so his earned income is $1,250 because the 5 months as a full-time student times $250. So we've met the criteria. Keep these numbers in mind because they're going to come back and bite them later.
Mm-hmm.
Now let's go back and say, oh, they're married, and Grant just was stay at home. Just give him the benefit of the doubt. He was just stay at home dad.
What if he worked from home?
that's
He has earned
different.
income.
That's different. He's got earned income.
Yeah.
Grant's a stay at home dad, even though they might send her off. We might send, do we have a name? Susan, off to daycare once or twice a week, just so we can get things done around the house. They don't qualify for this credit.
Well, I mean, if in your scenario, if Grant's a stay-at-home, if Grant works from home, and they're sending Susan to daycare so Grant can work
From home,
From home.
undisturbed from home, then they'll see what Barbara's earned income is, what Grant's earned income is, and the lowest income is what they'll figure that credit
Right.
off
It'll
of.
be net income for self-employment.
Right.
So they would qualify, although there is a line in here that you can interpret that they won't qualify because Grant never left the house.
Because he should be able to do it anyway.
He should be able to divide his time, but let's just throw that part out and say, well, he has earned income, he qualifies. I don't care where he did the job at. And maybe he does most of the work at home, but he's got to be able to leave.
Or if he has
On a
an
moment's
official
notice.
office that he just
Yeah.
at home for
Yeah.
He works remotely, but is required to be able to come into the office as needed.
Right. At the drop of a hat. You know, hey, this doesn't come out. Come in and we need to look at this or something like that.
Yeah.
So keep that in mind because we're going to come back. This rule applies for any spouse for any 1 month. If in the same month both of you and your spouse don't work and are either full-time students or not physically or mentally able to care for yourselves, only one of you can be treated as earned income for the month, which means you don't qualify for the credit.
Yep.
They figure somewhere along the line, although it makes less sense for the second part, but it makes a little bit more sense. Somewhere along the line as students, you should have been able to figure out both of y'all's schedules that somebody was able to be at home while the other one was at class. That makes less sense when you get down to nobody was able to care for themselves. That doesn't make any sense, but let's just go on from that. So you don't qualify for the child dependent care expenses. You still qualify. You still have the potential to qualify for the medical deduction. We'll go on from there. The care is provided for the qualifying person so you and your spouse, if you're married, can look for work or work. So I can take it, but if I'm out job hunting, but I got to have some earned income during that period or I don't qualify.
Yeah.
It's not enough that you incur the expense while you're working. The purpose of the expense was to allow you to work or look for work. Whether the expense is incurred to allow you to look for work or work depends on factors and circumstances. You must be paid. Unpaid volunteer work doesn't count. Of course, you have no earned income. Therefore, there will be a point in here where the formula would be invalid.
And if you volunteer and the person you volunteer for gives you $20, that's not earned income and it doesn't qualify.
Work is actively looking for a paying job if you have some income during the year. If you do not find a job and you do not have earned income for the year, you do not qualify for this credit. And that goes if the spouse spent all year looking for the right job. Well, no earned income, no credit.
Your spouse who is incapable of self-care as a full-time student for some part of each 5 months is treated as working at that $250 of earned income,
Yeah.
which doesn't exist. The $200 of fake money.
What if they have a scholarship and they get money?
That's not earned income.
That's not earned income.
That's unearned income.
Yeah.
Not taxable.
It is
Gen-
taxable.
It could be. It depends on the structure of the scholarship. Some are, some aren't. And some you could choose to use either way. When we talk about
Education.
when we talk about the education credits, there's an actual way that I could either treat it one way and not pay tax on it, or I could treat it as taxable income and take a tax credit. Depends.
Do they ever ask for proof of how you're out looking for a job?
Not that I've ever seen, but at that point, what's the point?
If you say, well, I would like to sit on
And remember,
But here's
I still have to have earned income. Even if I say I was looking all year for a job,
that. Well,
I
one
have
of
to
them-
have some earned income.
if you're the only one with earned income and your spouse sat on the couch all year and said, I was looking for the right job all year, I didn't work at all,
You don't
they're going to
qualify.
go off of his
Because he's the lowest.
earned income, because even at the $250 mark,
If you potentially qualify for it.
if you could qualify for it, that's only $3,000.
You're not going to get very much.
You're not going to get very much at all.
And of a non-refundable credit. Let's not overlook that
Yeah.
part.
Yeah, you're not getting, you're not coming in with no income, filing this expecting a refund, because it's not coming.
Maxine has Maxine has 2 children. She pays a daycare to take care of her children 3 days a week so she can volunteer and run errands. Maxine does not have any earned income because Maxine is not paying the child care expenses so she can work or look for it. She doesn't qualify. Thank you, Maxine, for doing your volunteer. That was nice of you. You don't qualify for this credit. Dave, Dora, married, have 1 child, 11. They pay child care expenses so Dave can work, and Dora can attend school full time. So far, looking pretty good to qualify for the credit.
Yep.
Work-related expenses cannot be paid to certain related parties. The care provider cannot be your spouse. I can't pay my wife to watch our kids and then write it off. Can't be my child, so I can't pay my daughter to watch my son if she's under 19
Or
and write
being,
it off.
or being claimed as a dependent.
Yeah, or a dependent being claimed on your tax return. So I can't have grandma who's living at my place watch the kids and then me write it off.
And you can't have your 20-year-old who's in college, living at home, being paid to watch her younger siblings.
Now, I can have grandma. I can pay grandma to watch the kids at her place
Mm-hmm.
and write it off. But guess what? We're going to come up to a point where we're going to think on who we're paying it to. So if I'm going to take this credit and I'm saying I'm paying grandma, grandma's better claim it on her tax return because they're going to be looking for it.
Well, to claim this credit, you have to list
The Social Security
the
numbers
name,
of the employer
address,
identification
phone number, social security number, or EIN of whoever provided the care. So you're going to tell the IRS, Grandma got paid $6,000 to watch her 2 grandkids. Now,
I qualify for the credit, by the way.
they qualify for the credit. Now, IRS is looking for Grandma's return. Well, Grandma doesn't think she has to file a return because all she has is her Social Security,
Or disability.
or disability. That doesn't have to file anything. Well, yeah, she kind of does because her kids just told the IRS they paid her $6,000 to watch their kids.
Oh, yeah, they take it out of your social security. That happened to my grandma.
They're going to hit her with self-employment tax.
So now she's got
self-employed.
right,
She's
now
running a daycare.
now she's got $6,000 of income that she's got to figure out how to put it on there. Now I can get her out of the self-employment tax part.
So can I. I've got an idea.
So
Call it hobby income.
just listed as other income,
Yep.
and hope
The IRS
that the
doesn't-
$6,000 of other income with her Social Security doesn't make any Social Security taxable.
Why would you run her discrepancy?
I wouldn't run her as a Schedule C.
At $6,000, she's not,
Not bad.
and she's watching the kids at her place. She probably doesn't have a lot of expenses. She's gonna pay
We
a
got
boatload of
internet, snacks. and
Well,
all
15,
that.
15 point. Okay, but even so, if your daughter's bringing the kids, dropping them off at your house, and then picking them up, you have no travel expense.
You have no mileage.
You have no mileage.
Unless you're taking them to the doctor.
Okay, but even if you're taking them to the doctor, what are you
Yeah,
getting?
something out of the
5 or 10 miles a trip, and unless you've got a sickly child, you're not taking them to the doctor all the time. You know,
It can be a problem.
It-
Like you
it-
said, run it. You can run it. You can run it your way. Your client's gonna owe. You can try it my and Matt's way, where we changed all the income
Almost even.
to other income. I'm calling it hobby,
right,
and therefore because she would watch the kids whether she got paid or not.
right.
This is just some inconvenience where they tore a hole in the wall or took the crayon after the, whatever. But grandma's not doing it to make money.
Right.
She's doing it to help out, and they're giving her basically here, buy some snacks.
You're taking them
Child
to the
support.
Y and go swimming.
Yeah, go to the
Yeah.
you go to the
Child
pool.
support.
Yeah. So, I mean, there's arguments that we could run it different ways. It just depends first on how she wants to do it. Grandma wants to look like she's working for whatever reason. Okay. She has earned income. She might qualify for an income credit depending on her age. Grandma could be 55. She qualify for EIC.
If you're getting your child care from DCF, I know for a fact they have to pay taxes on it.
Yeah. Well, because DCF knows
Yeah,
what they pay, they're going to report it.
Reports it.
Yeah.
Yep.
By the way, if your child is going to child care and DCF's paying for it, you get no credit because you don't have any out-of-pocket expense.
Yeah, if you're getting the daycare credit from DCF, they're paying whatever for your latchkey or whatever.
Mm-hmm.
You don't get that income.
By the way, latchkey counts as child care.
Yes.
Ashley and her son live with her mother, Maddie. Ashley pays Maddie to take care of her 6-year-old son so that she can work. Maddie's not claimed as a dependent on Ashley's return. Ashley can claim the credit using the amount she pays Maddie.
Yep.
So here's just basically the scenario we were talking about. Just say Maddie's grandma.
Mm-hmm.
If married, must file a joint return. So basically, it says married, filing separately. Don't bother here.
Yeah.
At the end of the year, Connie was still married. Her husband moved out in April. Okay, we're fine there. He refuses to file a joint return. Connie has paid all the costs of keeping up the home for herself and her dependent 4-year-old daughter and qualifies to be considered unmarried and file using the head of household status. Therefore, she is also eligible for the child dependent care credit.
Yep.
Now, if Connie's husband didn't move out until the 4th of July, she's married filing separately and there's not a thing we can do about it.
Yep.
She doesn't qualify for the credit. Jessica separated from her spouse in February. She is not separated under decree of divorce or separate maintenance, but she has lived apart from her spouse for more than 6 months. Maintains a home for herself and her totally and permanently disabled brother and qualifies as a qualified relative. Jessica also pays for an adult daycare for her brother so she can work. Therefore, Jessica can claim the child and dependent care credit providing we've met the other qualifications.
Why would his insurance pay for his
He has shitty insurance. To qualify all persons and organizations that provided child care, you must think on who you're paying. By name, by address, by tax identification number, whether it's a social security number or ITIN that you're paying to, or an employer identification number. You could be paying a business to watch your kid.
Mm-hmm.
You can pay the YMCA, EIN. You can get that from the school district for latchkey.
Yep.
Church organizations, if you're paying the church to watch your kid. If you cannot provide all the required information, you must be able to show that you use due diligence in trying to obtain such information. Yes. So that leads to some very entertaining scenarios. For instance, I know that there are daycares out there, or there used to be, let's just say that if you wanted a receipt, you paid X. If you didn't want a receipt, you paid Y.
Still out there.
They're
X
still
is,
there.
X is higher than Y. Why is that? Well, if you pay Y, I'm not going to give you a receipt. You're not going to be able to easily report this as income, so I'm not going to report it. That's an up and up child food care facility right there.
But you can still tell what is it actually gonna do.
You can tattletale, you can qualify for the credit, take it out at their books. By the way, you better be looking for a new child care facility.
Yeah.
Or you can pay X, which is the higher rate, but get a receipt, claim it on the taxes. They know that you're going to claim it, so they're going to write it down as income.
They're going to claim it as income.
Now, just like the scenario you said, okay, we've had some clients that didn't know this credit exists, and so they want to try and claim, hey, did you have child care this year? Yeah, sure. This person is okay. Well, can you get a receipt for that? No problem. I'll call them up. And they said, "Oh, I ain't giving it to you." And say, "Okay, well, you have two choices at this point. You can give me all the documentation that you can provide of when you paid them, how much. Hopefully, that you used a check or Venmo or whatever, Apple Pay, where I can track your payments to a certain party, and we can provide as much information. I can't provide a tax identification number, but I sure tell the IRS the name of the person that's getting paid and where they live. The IRS will figure the rest out.
Right.
We'll definitely send a letter saying we have indications that you received income that you didn't report.
Because what they'll do is if that organization filed a tax return, and the IRS says, well, it looks like the information we've got here, they made $25,000 more than what they're reporting, they'll send them a letter saying that you didn't report this income for and they'll readjust everything and send them in a letter saying, hey, this is what you owe us. Prove us wrong.
Yeah, the IRS, they'll do that. They'll figure the math for you on their new numbers that they can prove. And it's up to you to prove the IRS wrong, if you can.
Yeah.
Most of the time, by the way, for most of our clients, most of the time we can. The letter is the worst case scenario.
Yep.
You look at what they're doing, it's like, okay, well, because they're not going to throw any new tax credits that you might qualify for. You've got to prove that.
Yeah, they're gonna go, this was your gross, this is your standard deduction, this is what you owe, we're gonna add penalties and interest to it, and send a letter.
Now, if I could prove that the number was different, or even if the number was right, but all of a sudden now they qualify for this tax credit, I can change the number and send a reply back.
Yep.
Now, they don't owe 5, they owe 1.
Right.
So that's a big one.
We get letters like that typically when a client hasn't filed a tax return for 2 or 3 years, and then they come in and they file one, and then they come back a couple months later with a letter saying, well, we see here for tax year you owe this, and this, and they're like, then we have to go back and do those and say, no, this is what you actually owe. You still owe, but it's not nearly as much.
So just because somebody has a letter and is freaking out, don't freak out.
Yes.
Because, like I said, 90% of the time, the letter is the worst case scenario, and you can make it better. It might not make it go away, but you can make it better.
Well,
And sometimes you can make it go away.
the one that I had with the trucking company.
Yeah.
Got a letter for saying she owed $95,000, and when we got done, she actually only owed $5,000, and the preceding years, or the years after that, she was getting enough credits back that they just kind of made a wash of it.
Yeah.
Because she hadn't filed for like 9 years, 6 years. So.
All right, 2441 is our form, and up here, this isn't the entire form, by the way. This is just, right now,
Part one.
I am telling the IRS care provider's name, the address, the identifying number, and the amount I paid. So I'm telling the IRS who I paid how much.
If you participate in the Medicare benefit program, the amount of expenses you may exclude or deduct is limited to $3,000 for one or $6,000 for two or more. If you receive dependent care benefits that exclude from income, that amount must be subtracted from the limit on work-related expenses dollar for dollar. All right, so this makes a lot of sense. If my boss is paying for child care, I don't have an expense up to $3,000 or $6,000 if I have two or more, so I have no credit. That makes sense. That tracks.
And it does come on the
It would show up on a W-2. Now, Mm-hmm. what employers around here are providing that benefit? I have no idea.
I think you've seen one. and
Yeah.
by the time I-
Kansas Gas does.
Kansas Gas?
I think it's in box 10 is
Yes,
where that
box 10.
credit,
Yeah, box 10.
where that, on the W-2 is where that
Yeah.
credit will be.
I think I've seen one.
Okay, this is where this is another place where it kind of gets confusing because they talk about work-related expenses. Interpret that work-related expenses as how much money I paid to the daycare. That's the way it should be. Work-related expenses makes it sound worse. I mean, I get it. I'm paying the daycare so I could go to work, so it's a work-related expense. That's here. Work-related expenses must be for the care of a qualified person while you work or look for it. Expenses are for the care of a qualified person only if the main purpose was that for that person's well-being and protection. I can't employ a babysitter, and it could be a babysitter, more of a full-time scenario, but still, just so I can make sure that little Johnny doesn't go out and see the girl next door while I'm at work in the summertime. That has nothing to do with well-being and protection. Well, at least directly, anyway.
You know how that
Expenses for care generally do not include costs for food, clothing, entertainment, or education. This is just basically it. You're paying daycare for daycare. If in those fees is amounts paid for breakfast, lunch, and dinner, you're actually supposed to subtract that out.
Yep.
Which really, who's paying only $3,000 for daycare for one kid? Generally, if you're doing that, you're paying more than that. So that's not something I'm a big stickler about. You're already capped.
Yeah.
I'm only going to count the first $3,000. I don't care how I got there, because I'm going to assume whatever's left. I get to choose how I count it. So sure, yeah, all the $3,000. That's all the expense. What's left over? That's the food.
Right.
That's the entertainment. The fee to go to the Y or what have you that day.
I mean, if you think about it, 2 or more kids, you only get $6,000. So if you're paying daycare for 3 kids, you're probably paying somewhere in the neighborhood of $15,000 to $18,000 a year for those 3 kids to go to daycare all year. And you're only going to get to claim up to 6.
Credit's terrible.
So you've got,
And that's best case scenario.
yeah, that's best case scenario. So there's $9,000 to $14,000 there that you don't get credit for.
Claudia's other child attends first grade at a private school, whereas Claudia pays tuition. After school, the child goes to a child care center. Claudia cannot count any of the school tuition as care expense.
Nope.
But she can count the after school, so latchkey.
Yep.
Claudia has a younger child who attends a nursery school that provides some educational activities. Claudia can count the entire amount because nursery school is not an official school in this case, K-12.
She goes to La Petite Academy.
That doesn't count. I
That-
mean, that's a daycare, just
Right.
for the sake of the rule. Yeah, sure, they're learning their ABCs and their 1, 2, 3s and their colors, but that's a side effect, not the reason for being there.
La Petite Academy would be completely different than something like Head Start.
And start is a learning facility.
Yeah.
And that's what's free.
Right. But La Petite Academy, even though they would be teaching the kids how to count their
Right.
colors, everything, it's a daycare.
It's
Right.
a daycare. It's not school.
So what you would pay La Petite, you would be fine. But if you were paying Head Start,
Because there's Head Start Rainbows and there's one other one.
right? But if you had to pay them even a nominal fee, then you wouldn't be able to count anything that you paid them for that
Because that's education.
because it's educational.
of summer schools and stuff like that?
No, summer
No.
school won't count because it's education. Now we can start playing a little bit more fast and loose with some of those rules. What if I pay for summer camp? That's allowable to a point. I'd have
It
to-
depends on what fund it
It
is.
depends on what type of camp it would be, so say if I was paying for Boy Scout camp,
Maybe not.
maybe not, because there's a lot of education going on there, although it's not in an official capacity.
But if I was paying for the YMCA to take my kid for 10 days to YMCA camp,
Yeah,
Yeah, for swimming.
for swimming and just,
swimming,
General
archery,
recreation.
whatever,
yeah. So we got to look at the nature of who's providing and what. And then what, the question you have to ask yourself at some point, perhaps, is what hill do you want to die on? What do you want to try and go in front of the IRS and prove? Now, one thing I've never not brought up this year, but I've brought up in previous years, besides us and the internet, there is a place that we could go and ask Liberty questions like this, and they will take it to their experts who are tax attorneys and come back with you with an answer. You
That
might
li-
have to wait a half a day to get it.
that little torch up in the right-hand corner of your screen.
Yep. You're going to do some tech support, and you're going to ask the question, and you're going to get eventually an answer.
My client paid $1,500 to send his 3 kids to this camp for 10 days during the summer. Can they claim that expense as child independent care credits? We think it might be allowable. We need something definite.
We want a clarification, and they will give you one. So there's lots of tools at our disposal, and they don't charge us for asking corporate.
Nope.
I could ask all questions all the live long day. Amy could ask questions. It's not limited to just the people in charge.
No.
Anybody who can sign in can ask a question.
Anybody certified to file a return under the Liberty Tax umbrella can ask any question that needs to be asked if they do not have an answer or can't get one from somebody else in the office.
Or can't find a reliable one. You know how Google is. I can look all day and basically find contradicting answers. I don't even look at the
Type in one question, you get 5 different answers.
The court gives you what they perceive as the answer, you jot it down, and it's wrong.
Yeah.
The amount of work-related expenses eligible for the credit are the lowest of the following. What you actually paid. Well, that makes sense. Your earned income. Well, I can't pay more expense than I actually made, so I guess that makes sense. If you're married filing jointly, the smaller of the earned income of the two of you. Well, it makes less sense, but I see where they're going with this. A set dollar limit, $3,000 for one qualifying person or $6,000 for 2 or more.
Why do they cap it like that?
What, at 2 or more?
I have no idea. They figure you're getting a quantity discount? I don't know.
I would assume at this point it's to try to limit the amount of abuse for this. I mean, think about in 21 when they bumped those numbers up from 3,000 to 8,000 to 6,000 to 16,000 and was 50% refundable. The area for, I mean, you're looking at an $8,000 refundable credit right there for 2 kids. Granted, you had to meet all the other requirements. You had to put down the names and socials, or EINs, and everything else. You still had to do all that to qualify for that credit. But
At the end of the day, I don't think it's fair. Especially as a non-refundable credit.
yeah,
I don't think it's fair.
Because,
I'm fine with a cap per child.
$3,000 per child.
I don't think it's fair saying, okay, if I have 2 or more kids, my cap is 6. And if I have 4 that happen to be all of the age that they need care, I'm getting a job.
Well, and,
I don't think it's fair.
Basically working to pay daycare.
well, and especially with the way the new rules are, if you're a single parent, okay, you've got a 6, 8, 10, and 12-year-old at home, right? Well, 6, 8, 10, and 12. What's common between all 4 of those kids? They're all school age. Well, they're all school age. There's no reason why you can't go out and get a job if you want to maintain your Section 8, your Medicaid, your food stamps, and everything else. You can't just sit at home. So if you were getting if you were getting TANF, if you were getting food stamps, Section 8, LEAP, all of that, and you've got 4 school-age kids, now you have to go to work. So that means you either have to find a job that'll let you work while school's in session, so you can be there before the kids go to school and when the kids get off,
Yeah.
or you're going to have to start paying, at the very least, latchkey. Because latchkey is going to be your cheapest option.
But
But you're only going to
you're
be
screwed
capped.
today. No latchkey.
But you're going to be capped. Well,
Actually,
no,
Wichita's in session, so you'll be screwed on Friday. No latchkey.
latchkey runs when school's not in session.
Not always.
Mine
Not
did.
always.
Really?
Becky's
Mine
did.
did.
Only on big holidays. So, like, yeah, they ran latchkey over spring break. But, like, for this,
Newton runs latchkey all summer long.
well,
Okay, so
Good for
Wichita
them.
schools,
259 does
not
too,
all
but
the
it's
schools
specific
run
schools.
latchkey.
Really? Oh,
Then
really?
we have
Specific
certain
schools.
ones.
yeah.
Oh, wow.
All right.
Okay.
So we're back to Barbara and her husband Grant. Remember them? Pay child care expenses for $4,500, so Barbara can work and Grant can go to school. So already we're looking at limits. The dollar limit for Barbara and Grant's expenses are $3,000, except their eligible work-related expenses to figure the credit is going to be the lower of their 2 earned income, which is Grant's fake earned income of $1,250. So already we've gone through. They spent $4,500. I'm already down to only being able to work with, because we're going to make it even worse, work with $1,250 of actual expenses.
And I'm not even getting all of that.
And you're not even going to get all of that. I'm going to make that go even lower. You can see why this isn't the greatest credit. Part 2 of the 2441, the taxpayer must identify each person that is receiving the care. Name, social security number, as well as the expenses paid for that person. If qualified expenses were paid in care for more of 2 qualifying people, the dollar limit on line 3 is 6, not 3. The $6,000 does not need to be divided equally among them. So, basically what this is saying is that even if I'm limited, even if I only have 2 kids, and I pay $7,000 for one and $4,000 for the other, I still get 6.
Yeah, put in the whole amount, regardless of how much it
Yeah. Yeah, if you get an invoice for 2 kids that says they paid $11,000,
is. Put it all in.
when you're putting it in on each of your dependent slots, there's a question there that asks, was there any child care expenses? Put down $11,000
Yeah.
on each child.
Yeah. It'll cap it out. The program will cap it out automatically, so it's not like you're going to be at risk of getting a bad result.
Right.
What if
It'll
I
run it up to the limit.
already makes a difference?
It doesn't matter. If one child, if you got an invoice for $11,000 and $7,000 of that invoice was one child and $4,000 was for the other, it's not going to matter. There was 2 kids. There's a $6,000 limit. Whether they take the $6,000 from child 1 or whether they take $3,000 from child 1 and $3,000 from child 2, it doesn't matter.
Right.
They're going to look at the total number.
But you said to put the 11,000 in
On both,
But
because
to
it's-
me, that's going to look like $22,000.
It's not going to matter. It's
It
going to
doesn't
cap it
matter.
at
It
6.
Yeah, it's not
Cap it
going to. The system's going to cap it at 6. There's 2 kids. You know, I mean, if the invoice,
Okay, if you're not comfortable putting down $11,000 for each, put 6 for each.
yeah, if
That's the cap.
That's the cap.
you know that, or if you get 11,000, divide it by 2 and put that down for each
6
child.
and 5.
Yeah, 6 and 5.
That's just because you know how we
55, I
upload
don't
the
care.
Documents. I just wanted the document to match the entry.
And that's fine. I get what you're
Yeah.
saying. But
Yeah,
at the end of the day,
it's
we
still
don't care how we got the 6.
Just yeah, it's
Just as long
Yeah.
as the 2 of them combined gets there.
Yeah, especially if you've got 2 or more kids and you've got an invoice for over the $6,000 limit. It doesn't matter at that time.
Shane has two qualifying people for this credit. He paid $2,000 for after-school care for his son, $5,050 for after-school care for his daughter. Both children and the amounts paid are listed on the 2441 line 2. His dollar limit on this is $6,000.
You have a daughter?
No, I don't.
According to that, you
I
Are you
know.
sure she doesn't have 4 legs?
I hate to think of what she's doing right now.
Oh, heavens.
Last night she decided to attack the toilet paper, so I really enjoyed
Oh.
waking up to that. It was all over the place.
Yeah, that's a kitty move.
Well, it was in the living room.
It was fun.
So already we talked about this, we're telling who we paid it to. This part here is we're saying who got the care and for how much. And then we come down here, this is where we start putting our limits. So here's our limit of 3 or 6, depending on how many. This is our adjusted gross income. That's our adjusted gross income for the other one, if we have 2. And then we take the lowest of that and we run it through this table here. So remembering Grant, who, what, $12.50, right?
Mm-hmm.
So if you look at the table,
He gets
the
35%.
$12.50, you're going into this one right here between 0 and 15,000. That $12.50, he gets to take 35% of that number. That's actually the credit.
So he gets about $400 of the $1,250. Well, $400 of the $4,500 they spent.
Let's see here. We already talked about that, basically. We already talked about that.
Mm-hmm.
We talked about that.
Yep.
So here's our 2441 for Barbara and Scott, or Barbara and Grant. All right. So we're identifying who they paid for. Their daughter Susan, how much they paid, $4,500, but the cap is 3. Her income was $50,000. His is $12.50. So we have to enter the smallest of the two, $12.50. And that was nice of them not to complete the rest of it for us. There it is. So 12, or they're running 12 back at it, taking that times the 30%. Is that for that? Saying his credit's $1,800. That's not right. That is not right.
Is that Grant and Barbara?
Yeah, that's Grant and Barbara, and that can't be right.
No.
They've combined two different problems here.
Yeah, because it'd be 35% of
Of
$1,250, which would be about $425.
$400 and change.
Yeah.
So, it's not the greatest credit in the world. Right. It is a terrible credit. And most of the time, when somebody qualifies for it, they're only, I mean,
20%.
honest. Yeah. To be honest with you, the cost of the form would cost more than actually filing the credit. So
Figure it.
in those cases, we just ignore it.
Yeah. Your best case scenario is you're going to get 20% of $6,000. So you're going to get a $1,200 non-refundable credit for this best case scenario.
And the only time I would really appreciate on following it is if somebody owes.
Yeah.
Yes. I mean, that's the only time that it would be really worth it. Is okay, well, I'm going to try and get you
To zero.
get your number down as low as possible. Because remember, for child tax credit, this credit's used first before they use child tax credit. So it might, I mean, I'll run it and see what happens, you know. All right, adoption credit real quick. You'll never, ever use it. I've used it once. There's a couple different rules for trying to adopt a child that's U.S. born as opposed to trying to adopt a foreign born. And so I want to get down to this, just basically what the credit is.
Yeah, we might have a problem with that.
Yeah, the adoption credit, Lord knows what it's actually going to happen to it. I have no indication now of what it is. But I could see a point where they say, you try to adopt a foreign child, forget it.
Well, Broadway, Rock Road, we have a client who's, they had claimed adoption credits on like 5 kids. And the way their returns were done up, and I caught it last year, the way their returns are done up is they're claiming $16,800 and some dollars for each child because that's the credit. And I'm like, no, you understand, you only get a credit for the amount that you paid. If these are kids that you have adopted out of DCF and you haven't paid anything, you don't get the credit. And they're like, oh, yes, we adopted them, we get that
Were
credit.
they DCF kids or?
Yes, no, they were DCF kids,
I
and
thought
they
they
were
were
given
relatives.
the $16,800 and some dollar credit for each of these children.
That's really good about taking my thunder away. So
So,
he's covered most of the slides that I was trying to skip to. First of all, you don't qualify for the credit if you're married filing separately. You don't qualify for the credit, or you start getting reduced, or you don't qualify based on those income levels. You must have some sort of tax identification number at this time. We'll see what the rules change to, if at all. They might not. I don't know.
for that credit, I would assume an A-10 would still.
An A-10 should be treated as a Social Security number as far as I'm concerned.
Yeah.
But an I-10, I just don't know how that's going to play out.
Yeah.
All right, so Lawrence and Rhonda Smith are trying to adopt Andrew. Paid $7,450 in attorney fees, court costs, travel expenses related to the adoption. That's one thing. I can deduct any expense that I could draw a line to. The only reason why I have this expense is because it's adoption related. Whether it's paying the court, whether it's paying the attorney, whether it's actually going to get the kid because I'm in Kansas and they're in Washington State. Or in Romania. Now there is a difference of when I can actually count those on those last two scenarios, but so therefore I can look and I can start playing with the $7,450 as a non-refundable tax credit.
Mm-hmm.
That's here. Any excess credit not used in the year the adoption became final may be carried forward for 5 years or until the credit is used up, whichever happens first. Matt said
That's what we're dealing with at Rock Road right now.
16,000 some change, and that's a lifetime
Times 5.
times 5.
Well, there's 5 kids that they've claimed
Yeah,
in
it's-
total, and
it's-
everything is rolling forward.
Yeah, it's 16,000 per attempt.
Did they have 13 kids total? Just 5? I thought
5.
it was more than
No, it was 5
And
days.
it's a one-time pool per attempt.
Mm-hmm.
That so like that guy that's 7,450, he's taking out 7,450 of that 16. But he keeps rolling it forward until he either uses up all of the 16 or he gets done paying the expenses. If the child is a U.S. citizen or resident, the adoption credit can be claimed even if the adoption never runs final. If it falls through for whatever reason, I can still take the expenses in the year that it's expensed. Because I'm trying to consolidate this down a little bit.
Mhm.
Foreign child, if it's never complete, I can't take the credit. Foreign child, if I'm trying to adopt one, I could write off the expenses just like I could, but I can't do it until it's complete. So I have to eat it up until the time that the adoption becomes final on the foreign child.
Keep receipts.
Keep the receipts, and I can do it all at one time. On the domestic child that you're trying to adopt, I can expense the expenses that you have receipt for the following year. So you spent $7,450 this year, I can write it off. Next year you bring me some more, we'll take a little bit more off. I don't have to wait until you're done. I just have to wait until the next tax year.
Yep.
And that's this tale, and it's basically where I wanted to get to today. I've covered the credit. It's not very common.
No.
Basically, what's going to happen is if you got an adoption credit, you're going to look it up anyway. So I covered
These
it.
guys
You saw
are
it,
versed on that.
huh?
The people he's talking about, no. She's a stickler.
Well, but she's got it kind of wrong. She's taking the full amount of the credit, even though she can't. Matt's right. She's limited to her actual expenses.
She's taking the credit without having any expenses.
Yeah, you can't do that.
She didn't pay anything for the adoption.
We're good to go, by the way, if you're ready.
She's just claiming a $16,000 adoption credit because she adopted this child from DCF.
That's not what it's for. It's
That's
for
not what it's
reimbursement
for.
of expenses on the tax form.
And
Right.
if she ever gets audited,
She's
they're
in
gonna throw
trouble.
every dime out.
Yeah. $16,000 times 5 kids, they're going to throw all of that out. They're going to refigure all of her returns that she got a portion of that credit for,
And she's gonna be SOL.
and
She's gonna owe a boatload
they're
of money.
gonna owe a boatload of money. And then they're going to come back and scream and yell at Liberty that they did their taxes wrong.